أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. الحمد لله والصلاة والسلام على رسول الله محمد بن عبد الله وآله وصحبه أجمعين. Ladies and gentlemen, I greet you all with the greeting word of peace. Assalamu alaikum wa rahmatullahi wa barakatuh. Peace be unto you all. Good morning, good afternoon, good evening, depending on your locations. We will start or begin our event today with some verses from the Noble Quran. Hence, I will invite our brother, Sheikh Zarrar, to recite for us. Over to you, Sheikh Zarrar. Please, you can follow the translation on your screen, inshallah.
أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. وإذ قال إبراهيم رب اجعل هذا البلد آمنا واجنبني وبني أن نعبد الأصنام. رب إنهن أضللن كثيرا من الناس فمن تبعني فإنه مني ومن عصاني فإنك غفور رحيم. ربنا إني أسكنت من ذريتي بواد غير ذي زرع عند بيتك المحرم ربنا ليقيموا الصلاة فاجعل أفئدة من الناس تهوي إليهم وارزقهم من الثمرات لعلهم يشكرون. ربنا إنك تعلم ما نخفي وما نعلن وما يخفى على الله من شيء في الأرض ولا في السماء. الحمد لله الذي وهب لي على الكبر إسماعيل وإسحاق إن ربي لسميع الدعاء. رب اجعلني مقيم الصلاة ومن ذريتي ربنا وتقبل دعاء. ربنا اغفر لي ولوالدي وللمؤمنين يوم يقوم الحساب. صدق الله العظيم.
صدق الله العظيم. جزاك الله خيرا Sheikh Zarrar for this beautiful recitation. We thank you for that. Distinguished participants, ladies and gentlemen, for those who don't know me, my name is Ahmed Rufai, Head of Compliance at IIFM. On behalf of IIFM team, I'm pleased to extend to you our warmest regards and to welcome all of you. Nearly, I hope my voice, is my voice clear? As you say, can you hear? Nearly 300 people have registered for today's events. We thank you all for taking time to join us and be with us today. The objective of today's webinar is to launch the Sukuk, IIFM Sukuk Reports 12th edition for the year 2022. The IIFM Annual Sukuk Reports have been recognized as the primary source of reference and reliable information for the industry on the global sukuk markets because, one, it provides accurate and validated data, information for the sukuk market and sukuk issuances globally, as well as sukuk awareness. Two, it provides a detailed analysis of international and domestic sukuk issuances, sukuk structure developments, and types of sukuk issuers. Three, it also contains very useful and important reports on sukuk issuances by countries, in addition to case studies on landmark sukuk issuances and articles on sukuk market developments. These three elements combined certainly make the IIFM Sukuk reports very important source of information that a person is supposed to have and keep in his bookshelf for a quick reference. Distinguished participants, ladies and gentlemen, among the findings of this year's report is that the global sukuk issuance or the global sukuk markets has maintained its attractiveness to issuers, investors, and many market participants. This can be seen through steady and stable sukuk issuances from established and emerging sukuk issuing jurisdictions. Mr. Ijlal, the CEO of IIFM, will provide more detailed information about the findings in his key highlights of the report's representation, inshallah. Respected ladies and gentlemen, the role and contribution of the IIFM in facilitating the development and issuance of sukuk worldwide is not only limited to the publication of its annual sukuk report, but also goes beyond that. In the year 2021, 2022 consecutively, IIFM has published for the markets 2 sukuk standard documents, template sukuk al-ijara standard documents, and template sukuk al-mudaraba tier 1 standard documents. These 2 standard documents are widely used by the Islamic financial institutions around the world. At a steady pace, according to our monitoring system, to determine the extent of the market's use of the standards agreements published by IIFM. IIFM is currently exploring a much needed relevant sukuk structures to be standardized in consultation with all market stakeholders. To date, IIFM has published 16 comprehensive documentation and product confirmation standards, as well as related guidance notes across 4 areas. 1, liquidity management, Islamic hedging, sukuk trade finance, funded and unfunded transactions. IIFM has recently shown its very much relevance in the development of the industry by working hard, diligently, and quick to help the industry shift smoothly from LIBOR to risk-free rates, RFR, by issuing 2 standard documents: 1, RFR structuring solutions for Murabaha and Ijara transactions; 2, bilateral amendment agreements and IBO fallback definitions booklets for Islamic hedging transactions. In the process, my brothers and sisters, in the process of drafting these comprehensive documentation and product information, IIFM uses the AOF Sharia standards, the relevant AOF Sharia standards, and other Sharia standards issued by fiqh academies, means not only taken from AOF, and reputable Sharia bodies across the globe as a basis and fundamental source of any Sharia-related issue, in order to achieve Sharia compliance, harmonization, unification, and universal acceptance of those standard agreements issued by IIFM. Please feel free to visit our website. All these documents are there, and it's free of charge. Distinguished participants, ladies and gentlemen, today, along with launch of the IIFM Annual Sukuk Report 12th edition for the year 2022, we will also discuss very important or interesting topics in the company of high regarded industry experts. The discussion will include topics such as global sukuk trend in 2022, Islamic Development Bank sukuk issuance, the growth of sukuk market in Indonesia, sustainable development goals, SDGs, and the evolving sukuk landscape. Ladies and gentlemen, if you have any question during the presentation or any of the discussion topics, please feel free to type it or write it in the question box in your Zoom control panel. We will bring them, inshallah, up and answer them at the end of the presentation. The link of the IIFM Annual Sukuk Report 12th edition for the year 2022 will be available on the IIFM website, as well as today's events will also be available on the IIFM's YouTube channel, both after the events. Without further ado, let us begin with the functionalities for today. It is a great honor for me to invite His Excellency, Honorable Mr. Mohamed, Dean, Director General, Labuan Financial Services Authority, Malaysia, and IIFM BOD Board of Directors Vice Chairman, to deliver his opening address. Over to you, Tuan Haji Mohamed.
Bismillahirrahmanirrahim. Thank you very much, Dr. Ahmed. Can you hear me?
Very clear.
Dr. Sami Al-Suwailem, Acting Director General, Islamic Development Bank Institute. Brother Ijlal Ahmad Alvi, Chief Executive Officer of the International Islamic Financial Market. Distinguished guests, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh, and a good day to all. Alhamdulillah, praise be to Allah the Almighty, for with His blessing and guidance, we are able to meet here today. I would like to extend my warm welcome to everyone to this event, held in conjunction with the issuance of the IIFM annual publication, the 12th edition of the IIFM Sukuk Report. The publication of the IIFM Sukuk Report not only shows the commitment by the IIFM workforce to publish a quality and comprehensive report on global sukuk development, but also the determination to provide continuous support to the Islamic finance industry, predominantly in the global Islamic capital market. I'm grateful to IIFM for the opportunity to deliver the special address for today's event. As you all are well aware, the evolution of sukuk market began with the issuance of the first corporate sukuk in 1990 by Shell Malaysia. Today, sukuk market has grown by leaps and bounds in size and sophistication, with the strength lies in its distinct structure. Sukuk is an asset-based instrument bringing unique value proposition to both investors and issuers. We are now at the verge of another metamorphosis of the digital era, in which digitalization has affected the market landscape by becoming an enabler for greater connectivity, accessibility, and inclusivity for issuers, investors, and intermediaries. This represents opportunities for the Islamic capital market to leverage on financial technology in facilitating innovative structures such as digital sukuk, also known as sukuk token, which will become a trend in years to come, inshallah. This time around, I wish to highlight 3 points on diversification of sukuk, especially on structures, issuers, and investors of the new sukuk tokens. There are various structures of sukuk, namely ijara, musharaka, murabaha, wakala, musawama, to name a few. Each structure can be tailored to meet the specific needs of the issuers and investors while adhering to Sharia principles. At the same time, there are hybrid sukuk structures that are positioning itself in the sukuk market industry. Hybrid sukuk, as we know, are a type of sukuk structure in which the underlying pool of assets consists of 2 or more Islamic finance contracts. We believe that these structures are suitable for sukuk token or digital tokens, as they are for traditional sukuk, which in fact enhances it with standardization, efficiency, and transparency through the use of blockchain, depending on the particular needs of an institution. In this connection, I wish to highlight here that IIFM, in its effort to facilitate Sharia harmonization, has published 2 standard product templates on sukuk, namely Sukuk al-Ijara and Sukuk al-Mudarabah. These standards offer Islamic financial institutions with a comprehensive set of widely accepted and legally sound financial documents and product confirmation. As a result, Islamic financial institutions can benefit significantly from being IIFM members and adopting its standards. We sincerely hope that more Islamic financial institutions would join the IIFM and play an active role in deliberating and shaping the standards being developed by the IIFM. In terms of diversification of issuers and investors, digitizing the sukuk via sukuk tokenization opens a new spectrum of issuers and investors. Tokenization makes it possible to materialize and unitize existing assets from the physical world to the digital world. This could lead to new business models and potentially as a new means to raise investments or fundings in the future, therefore diversifying the issuer to include the smaller and medium enterprises. Essentially, digital sukuk allows new types of issuers to tokenize the assets, similar to investment in sukuk, where a digital token is created on a blockchain that supports smart contracts to represent interest in the underlying assets, beneficial ownership, and constructive possession. Smart contracts are also determine how the token can be purchased, traded, and sold in a compliant fashion. And since they are blockchain-based, the transactions are immutable, traceable, and fully transparent. The artificial intelligence or AI technology at work will ensure the Sharia compliance is end-to-end with less human intervention. In terms of investors' diversification, digital sukuk provides greater accessibility to retail investors. Traditionally, sukuk issuance has been limited to institutional investors and high net worth individuals due to the minimum investment requirements and the complexity of the process. However, digital sukuk can be easily traded on digital platforms which can open up investment opportunities to a wider range of investors, including retail investors. Retail investors can participate in the more bite-sized Sukuk offerings with lower investment amounts, allowing them to diversify their investment portfolios and potentially benefit from the return generated by Sukuk that is certainly more cost-effective. By leveraging on digital technology and blockchain, digital Sukuk can provide a more user-friendly and simplified investment experience for retail investors, making it easier for them to research, invest, and manage their Sukuk investment. Nevertheless, it is important for retail investors to conduct their due diligence and understand the risks associated with investing in Sukuk, as with any investment. They should also ensure they comply with any regulatory requirements and seek professional advice if needed. Ladies and gentlemen, it is envisaged that more and more Islamic finance centers will embark on digitization as a step towards modernizing the funding and investment avenues. Pursuing Labuan IBFC's aspiration as Asia's Islamic Digital Asset Center, or IDAC, apart from the pronouncement on the minimum compliance criteria for offering of Islamic digital-based solutions, Labuan IBFC launched its first Sharia-compliant ESG-based digital exchange last October, potentially making it one of the first Islamic digital exchanges on offering. This exchange platform focuses on tokenization of securities, including Sukuk, gold, and immovable properties, allowing for immediate buying and selling of securities through its integrated blockchain technology solution and support from a comprehensive ecosystem. It creates a competitive market environment for Labuan IBFC as a funding, raise, and investment hub in the digital space. Labuan IBFC has much to offer to the global financial world. As we continue to grow our digital ecosystem, some of this opportunity can be further explored with the hope that insights can be gained on the benefits and usefulness of such offerings, inshallah. It is certainly an exciting time to be at the dawn of the next phase of evolution of the Sukuk offering to witness the Sukuk token or digital token taking shape. On that note, I wish to end my speech and wish you a fruitful and engaging webinar ahead. Thank you very much for your attention, and wabillahi tawfiq wal hidayah. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam wa rahmatullahi ta'ala wa barakatuh. Thank you very much, as usual, as always. MashaAllah, we benefit from you, Mr. Vice Chairman. And thank you for this important, educative, and inspiring speech, especially on digital transactions, inshallah. Ladies and gentlemen, it is my great pleasure and honor to invite the renowned and highly respected eminent scholar and recognized expert in the industry, His Excellency, my dear Sheikh. Only my Sheikh. No, you are not included at this end. My dear Sheikh, Dr. Sami Al-Suwailem, Acting Director General, Islamic Development Bank Institute, to deliver his keynote address. فليتفضل مشكورا فضيلة الشيخ.
Thank you very much, Brother Ahmed. Bismillah ar-Rahman ar-Rahim. Your Excellencies, distinguished guests, Assalamu alaikum wa rahmatullahi wa barakatuh. I would like to commend the consistent efforts of the international Islamic financial market in enlightening and informing the industry through its authentic and reliable reports and sources of information. I am also impressed with the speech of His Excellency Sheikh Mohamed Din, and I would congratulate Labuan International Center for taking these pioneering initiatives to bring the Islamic finance industry to the 21st century. Actually, I don't think I have much to add, because probably I would share or emphasize some of the points made by His Excellency. So I hope that the audience will not feel I'm repeating what he has said. So let me ask a simple question. What is the value of technologies? I mean, we are living in a very special period of time in which technologies are, you know, revolutionizing our daily activities. Now, these technologies have their costs. There is no free lunch. I mean, economists always like to emphasize technologies have their costs, and therefore we can ask, how can we use technology in a way that would maximize its value to Islamic finance? Some financial instruments in the Islamic finance domain are quite efficient and could benefit from these technologies. Some other arrangements, however, are quite complicated, as many of you are aware. And I'm afraid with these complicated structures, adding another layer of the blockchain or artificial intelligence or distributed ledger might actually make things even worse. So it is very important that we identify when and how to introduce or capitalize on technology. In my opinion, the maximum value of these technologies can be achieved with the most efficient and lean financial structure of our instrument. With lean financial structure, technology would be able to add maximum value. Moreover, with lean and efficient structure, the true value proposition of Islamic finance becomes quite visible. While when things get complicated and too many transactions and documents are piling up, the essence of Islamic finance get buried into these heavy documents, and it might not be clear how these structures would add value. Now, it's very obvious that the most efficient Sukuk structure, since we are now celebrating the 12th Sukuk report, so it is quite relevant to talk about Sukuk. The most efficient Sukuk structure is profit and loss sharing. It is just one step. While if you compare this to, let's say, for example, Ijara Sukuk, that you have to have an asset and sell the asset, lease back the asset, and then issue an undertaking, have another undertaking to replace the asset. As you are aware, these are, regardless of the Sharia issues, but it is quite complicated, and it will take really a good time and effort to manage these documents, while a simple profit and loss sharing instrument is quite efficient. Now, the issue, of course, is that these kinds of arrangements are information intensive. They require managing information before and during and after the Sukuk duration. And this is where technology can be very helpful. To start with, I would fully support the idea of digital Sukuk and having Sukuk issued through blockchain platform so that it becomes available to the mass, to the retail. This decentralized distribution would make it more efficient to reach out to small investors and therefore enhance financial inclusion. Now, to close the information gap, this blockchain technology or platform has to be fully integrated with the ERP of the issuer so that the financial statements and cash flow statements of the issuer would be provided to investors before and after. So before, that means with the prospectus, investors are able to verify the validity and authenticity of the information provided in the prospectus. During the Sukuk duration, investor will be able also to monitor the performance in real time. So it becomes fully transparent process whereby investors are able to follow and to monitor the performance of the issuer. And needless to say, this would put a lot of, this would provide great discipline and incentives for the issuer to perform, given that there is not much to hide, right? All the information, the necessary information is available. I will come to later to how to manage sensitive information. Now, the problem is not with lack of information. Actually, the problem with too much information. We live in an ocean of information everywhere. So this is where artificial intelligence and machine learning can come to play. These technologies can screen out this massive amount of information and detect patterns that are relevant for the objectives of the investors. So, as I'm sure you are aware, these AI technologies have been successfully used to quantify risk of agents or people who have no financial account even, based on their social media and their social relationships, based on their phone bills and other information available in very unexpected sources. These technologies were able to quantify the reputational capital or reputational collateral of those persons. And based on that, fintech companies were able to provide financing to those agents. Unfortunately, some of these were interest-based, in which agents ultimately got into debt trap with compounding interest and exploding debt, which ultimately defeated the purpose of having actually financial inclusion. But from an Islamic finance point of view, the availability of these kind of algorithms for screening out the massive amount of information is extremely helpful for investors before deciding to invest, because these will provide risk indicators to investors to assess the eligibility of the issuer. We are familiar with credit scoring, right? But credit scoring, not only it's old-fashioned, it's biased toward credit. It is not related to business worthiness. So it focuses on credit worthiness rather than on business performance. If we are targeting efficient Sukuk structures based on performance, then that's where we can use AI to develop or to quantify risk measures related to operations risk, to performance risk, and in addition to that, credit risk. This will give, in my opinion, a comprehensive framework for assessing the risk that are related to this kind of instrument. Now, this takes us to the next point, which is that we need a platform that will develop and quantify these risk indicators based on the, as we said, the financial statements of the issuer, and based on other sources of information, like, for example, the social media accounts of the management of the company. Any one of you who work with a bank, he knows that if they want to evaluate a company, they don't just look at the financial statement. They look at the management. They look at the individual management team members, particularly the senior management, and see their performance, their achievements, and so on and so forth. And this is the standard, by the way. If you go to any information website on evaluation of companies, you will find the information on the senior management in particular. And that's, by the way, what Warren Buffett keep emphasizing, that if you are buying stock, you are buying business, and you have to understand really what this business is doing, who is managing it, and how they are performing. Now, in blockchain technology, there's something called zero knowledge protocols. If in case there are sensitive information in the financial statement or other in-house sources of information of the issuer, then these protocols or these algorithms will extract the risk indicator from this set of information without disclosing the actual data. So we can achieve the best of both worlds, protecting the sensitivity of that set of information of the issuer, while at the same time providing the proper signal or indicator to investors regarding the risk or the indicators of performance of the issuer. Now, I should emphasize one important point in my opinion. This approach towards Sukuk, which is massive, based on approaching massive investors or retail investors, those investors will be on control of these platforms or this risk indicators platform, because they are the investors who will contribute the money. And you can see how this is different from the traditional model of rating agencies. In the traditional, currently prevailing model of rating, the company would pay the rating agency in order to give them a certificate that they are good, they are, creditworthy, and so on. And as we all know, despite all the effort and standard to make this as proper as possible, the model is deeply flawed. There is serious conflict of interest, and this conflict of interest was mostly visible during the financial crisis. Again, this reflects how old I am, and I'm sure many of you were quite, aware of what happened during the global financial crisis. So, shifting the power of rating or risk evaluation from the issuer to the investors provide much better governance structure than the existing rating agency structure. As His Excellency pointed out, the prevailing structure is that institutional investors and big corporations, they dominate the whole process given the size and resources. However, technologies would shift at least some of that power to the mass, because collectively the mass will have equal powers or competing powers to those of big institutions. So shifting the power to putting the small investor in the driving seat when it comes to developing risk indicators of the issuers would improve, in my opinion, the harmony of interest between issuers and investors, and in the middle, these risk indicator platforms will probably have better and more objective evaluation of the risk of the issuers. There is no perfect world. We will never be able to reach flawless financial environment. We will never reach that point, but we can improve the environment. And I think with this approach, where the retail and the mass investors are actually the target, and those are this is the segment that will be in charge, I think this would improve significantly the governance structure. Now, that would not be very helpful if all the money is paid from day one to the issuer, and then we monitor the performance in real time, because if the performance goes down, we lose our capital. So the next step in managing the risks through these technologies is staging capital commitment. Now, this strategy is well known for quite some time. Staging capital commitment is not something new, but with the technologies, it can be brought to a higher level and much more efficient way of application. So instead of giving all the Sukuk proceeds at once to the issuer, they can put in an escrow account. 20 or maybe 25% will be paid to the issuer. The remaining will stay in the escrow account with a third independent party. And therefore, based on the performance of the issuer, then stage 2 of the proceeds will kick in which another 25% say will be transferred and so on. And because of these risk indicators, because these risk indicators are not necessarily about profit, it's about overall performance, then the issuer will not be worried to make money quickly, because that obviously will deteriorate the performance. Because these indicators will be quite comprehensive and general, we can assess the performance even if the project or the company is not yet generating profits, particularly for small and medium companies. So staging capital commitment can be very effective in disciplining the issuers and providing the investors the necessary protection, or at least an important level of protection against malpractice or mismanagement of the issuer. But we can even do more. Given the mass of the investors, we can have collective or cooperative insurance. Insurance is one of the most eligible arrangement to benefit from the technology. It can be completely automated, because given the information and given the contribution, the distribution of the or the reimbursement based on the collection or collected premiums can be easily done. So this is another layer that can be offered to investors based on advanced technologies. Now, let me conclude the final level of protection, which is the following. When we talk about profit and loss sharing, we usually think about equity, but this is not true. Equity is one form of musharaka or participation, but it's not the only form. There are many other forms of participation or musharaka. Equity is unique in the sense that equity holders or investors are the last in line in case of default or in case of insolvency. The last group of investors to get their rights would be the equity investors. But we don't have to have this for all kinds of musharaka. We can have participation in the assets, but not the liabilities. This has been known, by the way, even in the classical fiqh books. The Rabbul Mal would tell the Mudarib, you buy and sell on the spot. If you want to buy on credit, this will be your responsibility. So effectively, Rabbul Mal is participating in the assets, but not the liabilities of the activities of the Mudaraba. The Mudarib will be responsible for the liabilities, but that doesn't mean it is guaranteed, because the investors will take the risk of the assets, but they will not be the last online. They actually be the first in line when it comes to their share of the assets. So their share of the assets, they will have first claim on their share of the asset. But the value of the asset obviously can go up and down, and therefore there is no guarantee. But this provides another layer of protection to Sukuk investors, whereby they don't take the liabilities or debt obligations of the issuer. They take only the asset side. And again, with the full integration between the digital platform to issue the Sukuk and the ERP, the enterprise resource planning software or system of the issuer, it can be easily arranged that the investors will be, monitoring and participating or sharing the assets rather than the liabilities. So let me conclude with the following. Technology is revolutionizing our age. This is a fact, and we think Islamic finance has a great opportunity to benefit from these technologies. However, to maximize the capitalization or the value generated from these technologies to Islamic finance, we really need to take the most efficient and lean structure of Islamic financial instrument, because that is where the value proposition of Islamic finance will become most visible and most value creating to the economy. So I again thank the IIFM for their consistent efforts in supporting the industry. Maybe I should conclude by saying that at the Islamic Development Institute, we are now exploring having an AI assistant, a large language model that would benefit the industry. And now we are exploring feeding or training the AI using the publicly available reports, including the IIFM report, which are obviously a reliable and authentic source of information for the industry. Thank you very much for listening. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam wa rahmatullahi ta'ala wa barakatuh. Thank you very much, my dear Sheikh Dr. Sami, for this well-taught keynote address and for these very insightful and useful words for the Islamic finance industry and its future aspiration, especially on Sukuk issuances and what to be done or steps to be taken for its further development. جزاكم الله خيرا. العادة دائما نتعلم منكم مشتاقين للجلوس معكم إن شاء الله. جزاكم الله خيرا. Now, I will turn the time over to Honorable Mr. Ijlal Ahmed Alvi, IIFM CEO, to announce the launch of the Sukuk report for edition and to present the key highlights of the report. Over to you, Mr. Ijlal.
Bismillahirrahmanirrahim. Excellencies, Excellency Dr. Al-Suwailem, Excellency Brother Nick, Excellency Arif, Dr. Arif, Bank Indonesia, dear fellow panelists, and all the speakers and all the delegates. Assalamu alaikum wa rahmatullahi wa barakatuhu. A very good morning, also afternoon in some places. And we're really grateful for all of you, especially our speakers and all, for joining us in this annual webinar, which inshallah, we IIFM intend to continue, inshallah. And really what's been said is very useful so far, both on digital sukuk, on use of AI technology with the information shared. It's really very beneficial, inshallah. Industry will benefit. Without delay, I think first we will just run a small clip on the Sukuk report. And then, inshallah, I will go over some of the findings of the reports, what the trends are like, and how Sukuk as an instrument has worked during these times, in changing times, which I will mention in terms of economic environment, what we have globally. So let's run that.
IIFM team. They also worked hard. So inshallah now I will go into some of the details, and I'm hopeful you will find it useful in terms of how things are, certain things can be looked at. And then we have inshallah the sessions which will further enhance, including the country report, the site from Indonesia, and also from Islamic Development Bank and other sessions. So if I can start my presentation. Go to the next slide. Next slide. So this is Sukuk issuances. What you can see, we have, in 2010, have included, previous, when Sukuk started, as it was mentioned in 90s, but it was one issue, but actual start was 2001. And since then, some of the issues have matured also, because at that time, initially, the Sukuks were issued mostly for 5 years, 7 years. But now we have, as we will notice, inshallah, longer term Sukuks also. And you can see, in terms of 2022, which we have this verified data, and we are thankful to all, which we have acknowledged. You can see in the reports, all the regulators and all what these which help us to put together this data. There is slight marginal, I can say, drop, and which is natural in terms of sometimes the economic environment. And you can see a drop of around 3% if you compare it with 2021. And if you look at it in this chart, we see 2015, and that was not really something which one can say, and I'm repeating myself from previous years, is that's more of a strategic decision to move from the short-term Sukuks and keep the short-term Sukuk for only liquidity management, and move the investment type Sukuks to a longer tenor. And that's something you will notice when we sort of go into the Sukuk tenors, short-term versus long-term. You'll see how the shift has taken place compared to the previous years, like up to 2014. So this is something which was an adjustment by the major Sukuk issuing jurisdiction, Malaysia. And that was, helped the industry, helped the Sukuk market to grow, and that's, how we have seen the progression. So this is one thing. And what we have seen in 2022 is also, the global economic environment. Naturally, we are all aware how, the inflationary pressures built up, how, the COVID times, the pricing was different, how the business activity was different. And Islamic industry is linked with the global markets, right? So this is something which we have to be mindful that, when the change of, the benchmark rates has, taken place after nearly 15 to 20 years. And we have seen the longest, tenor in terms of, the very low rates. So it lasted for many years. And we were used to, the lower rate side. And now, the industry actually has moved into a different direction in terms of the benchmark rates. So naturally, those adjustments are taking place. But having said that, the Sukuk in general has not really, if I'm correct to say, in that session, panelists, inshallah, will also mention, they will agree with me, I hope so, is that it's not really that much impacted. There has been progression in the Sukuk. So that's why we call the chapter, you will notice that, I called it a resilient market. It is basically, new jurisdictions have joined, new types of Sukuks are mentioned, like digital Sukuk or Sukuk on the, crowdfunding platform, retail-oriented Sukuks, other Sukuks, infrastructure Sukuks. So these are all sort of, things which have, happened and helping the Sukuk market. And what we can see, and that's something which, if you, I'm sure, have seen the IFSB Financial Stability Report of 2022, which was launched last month. Subhanallah, time passes very quickly. It was, it says the data they have put together, verified industry worth is 3.25 trillion. Out of that, if you calculate the outstanding sukuk, which I will mention, it is 25, nearly 25% is really coming from the sukuk. So one can see the overall importance of the sukuk. And that's why Dr. Al-Suwailem also mentioned certain things which will definitely, help the sukuk market the way he explained. We are really thankful to him. Also, Brother Nick, the way he mentioned the digital, exchange. And these are all sort of, infrastructure things which are needed. And of course, IIFM is there to put together the standardized documentation side or certain related, as per our mandate, which we strictly follow. So this is something which, if you look at this slide, I wanted to say, if we move to the next slide, this slide tells you about the long-term and short-term market. And you can clearly see how, long-term market has behaved over the years. Of course, it's been moving, but this time we had a drop. And as I said, sukuk previously, when initially they were issued, they were mostly issued linked to LIBOR, which is now gone. It is all finished, as we know, and that's a different topic. And now we have risk-free rates, or in case of sukuk, the benchmark generally uses mid-swap rates or relevant rate for especially long-term sukuk. So there is an adjustment slide of about 11.6% in the sukuk, long-term sukuk. And you can see the short-term sukuk since 2015 has been picking up, not only from Malaysia, but we have other countries like Bahrain, we have seen like from Brunei, we have seen from Indonesia, Malaysia, and also, we have seen of late, Turkey also of late have issued many short-term sukuk. You have also, ILM issuing international sukuk, which you will notice. These are all sort of things which is helping in the liquidity management. And then when we go to the structure side, I will mention how, structurally certain sukuks are put together for liquidity management, could be different requirements for structuring. And, how the Sharia is approved and, all the validation being done, and the Sharia angle, there we respect all that, what is being developed, and we continue to, work toward improving. But as we can see, things have progressed. One can see, before 2008, again, Dr. Sami was mentioning about the age, I've been around also, alhamdulillah. And we can see 2008, the crisis time, some lessons were learned, like lessons learned on explicit versus implicit guarantees, especially for quasi sukuk. And the other things, how sukuk will work out in terms of restructuring, in terms of sukuk default, which are less now. But those were lessons learned as we moved around. And also see the creditworthiness side, and Dr. Sami mentioned some other aspects also, which we have to also work on. So if we go to the next slide, so this is something on the short-term sukuk. If you see very quickly, in terms of global sukuk issuances, how the monthly trend has been in 22, so you can see it's not really that much fluctuation when we see global sukuk. And global sukuk, as you can see from glossary, what we mean is it's domestic sukuk issuances plus the international sukuk, which are in hard currency, mostly dollar or any other hard currency. So this is something, we can see from global sukuk. If we go to the next slide very quickly, it's again, you look at the domestic markets. So there are sometimes, some, dips, but it's not really, what you can see, there have been issuances coming from domestic market. And that can tell you how sukuk market during 22 has evolved. You can make out how, domestic market, the role they are playing in terms of development, and new countries are joining in that, even from Africa, also like Egypt and other countries, Tanzania, for example. If you go to the next slide very quickly, you can see this is the international sukuk issuance. And I think that's one reason why you see a larger, drop and then some pickup is, in my opinion, is due to the changing benchmark rates. At least 7 to 8, I think, benchmark rates were changed up, globally adjusted by global regulators. And you can see impact on the international sukuk issuances. In some cases, maybe it was requirement or not there. Sometimes it could be price. But domestic market, you can see clearly, were issuing sukuk. But internationally, sukuk, this year has been, last year was difficult in some sense. But sukuk as a whole, continue to be issued. You go to the next slide. Now, these are your international sukuk issuances. As you can see from this previous slide, there is a drop in international sukuk issuances. And you can see the drop of around 27-28% there, about $13 billion. And you can see the total issuances, some of them have matured, is around 417 billion. So that's the contribution of international. And international sukuk, as we all know, play a major role. Although if you compare it in domestic market, their size could be, less. My slide in the end will tell you, I'm keeping it not really secret, but what is the outstanding sukuk. So I can keep it for that slide. Go to the next slide, please. Now, if you see the long-term versus short-term sukuk issuances, you can clearly see how sukuk has shifted in terms of how they were basically till 2012. We didn't really see international sukuk. This is talking about the international sukuks, and the reason has been the Bahrain started issuing short-term sukuk. It's the first country, followed by I think by Brunei. Then is 2001 when they started with the Ijara and Salam sukuks in dollar. And then it was discontinued, starting 2001, 2002, in 2008. And then you will see that there was no international sukuk issuances till you see the arrival of IIFM in 2013. And you can see, this international sukuk or short-term sukuk issuances are basically mostly ILM, and you can see the progression, there and the role they are playing, especially in the liquidity management. And you can see how, the longer tenor sukuk were more issued, as we can see. And I think the drop, you can see after some years, we are seeing a drop in the sukuk issuances, international long term. But that's something which I think really much, how the adjustment takes place. And as we go, inshallah, 23, we'll see, continued. In this also, you will see the sukuk also, the potential for ESG related sukuks also. That's something also, have issued around 8.8 billion of ESG related or sustainable sukuk, if we can say, during 2022. So that is also something which is also playing a role in terms of, furthering the sukuk market. We have around over 30 billion now as of 2023 mid. Sustainable sukuk issuances as a whole. So that has also a huge potential apart from other sukuk types which were mentioned, which are coming out like infrastructure or based on work sukuk, which are issued by also from Indonesia, which is a good development. So these are all sort of things, and we have seen also, some in the short-term market, especially on the crowdfunding platform, again from Indonesia, very small sukuk size of around $30,000 or maybe 25,000 also, smaller, which were basically issued for retail investors for a short-term period. So these are all, I think, what we are seeing as a good development, and issuers were small, very small companies, not smaller spectrum of SME, if I may say. So this is something, on this slide and the next slide. This is your domestic market. And like I said earlier, that your domestic market has basically a key cornerstone. Different domestic markets, as we have mentioned, and the key markets, of course, is GCC, Malaysia, Indonesia. Also, we have Turkey also playing a role. And there are other countries which are also coming, like Bangladesh or Pakistan or from African countries also, and others who are joining. So this is something which I think as we go along, the domestic market is developing. And we can clearly see that in terms of domestic issuances, it has continued the progression. It increased by about 6% as compared to 2021. So we have like domestic issuances of about 1.3 trillion. So this is something 1.4 nearly trillion dollars Sukuk issuances so far. Some of them may have matured, as I said earlier, but some of them are continuing, especially if they issued in the later part, like 2008 or 2010 onward. And we have Sukuk now issuances, in some cases international Sukuk issuances also, but domestic issuances starting from 10 years, 15 years to up to 50 years we have seen from Malaysia. 30 years we have seen from Indonesia. Saudi Arabia is also playing a role. We have also short-term Sukuk issuances from those countries as well. And also UAE also plays a role in terms of Sukuk market. So if we go to the next one. And this is your sort of chart. Again, I think some of the points I've already gone through, and I've already mentioned, this adjustment of 2015, which was, we made it blue because I want to emphasize it's a strategic adjustment which took place, and then you can see how it adjusted and how we have seen in the domestic market, the long-term issuances, have continued to increase, as we see. I need to develop, of course, the domestic short-term market, which is generally the case for liquidity management or providing, level playing field to the institution in terms of managing their liquidity. That's a very key element for especially new jurisdiction. Established jurisdiction also are playing a role in that, and that is something what we have seen how the progression in terms of the tenor has taken place and then continue to sort of increase, and its share is around 67% of long-term Sukuk issuances since inception, and around 33% now adjusted for the long term is around 33%, and short term is around long term is 67. I think there's some adjustment. We'll check on that, and the short term is around 33. Next slide, please. And these are again these points I have gone through in terms of how the short-term market has evolved. So we can go to the next slide. And these are your international Sukuk. Obviously, now it's mostly ILM, and we are all familiar with ILM and the role they are playing. So they are playing a major role. And I understand they have up to 1 year now also doing, but 3 months tenor or less. 1 month tenor. They're issuing those Sukuks now regularly, and they have kept a issuance level of about 13 billion to around a little above that. Next slide, please. This is your domestic Sukuk market, and it has a jump of around 22%, we can say, in 2022. So we have seen, certain other domestic countries, like I mentioned, have started doing issuance. Some cases could be because of the benchmark rates. There could be a small element which I saw in a few countries like Turkey, for example, could be issuance could be on the short end of the market, and then maybe maximum 2 years or 6 months. But this is something which I think normal. But we have seen continuing sort of a progression in domestic market from various countries, which is what we need for the industry development. Also, it's a key element, not only Sukuk market, if we look at it. Yeah. Next. This is your global sovereign Sukuk, and sovereign, has been playing a major role for a long time, and they have been driving force, which is natural. Which in my view, it was needed also, and it's taking place. We have seen in some cases a larger, increase in previous years, This year we see a small marginal increase, but it's been stable, and sovereigns have played their role. Some sovereigns, they have issued sukuk for the infrastructure, like I mentioned, requirements also. There is huge potential for that. So that is also something which I think is led to sovereign sukuk issuances, and they kept that flow. Maybe sometimes we have a larger increase as compared to other years, but this year has been 2022 has been a reasonably good year. It's safe to say that. Next slide, please. I can do it. Okay. Global quasi-sovereign, and these are now plays a major role in terms of power plants. You have in terms of certain sovereign wealth fund also issued, like Khazana from Malaysia, or Mumtilakat from Bahrain and other countries. They have issued sukuk and other entities. They play a major role, and you can see how in various years sometimes you have a drop, but generally so quasi-sovereign have been playing their role, and that's where I mentioned about the implicit explicit guarantee issue, which was not highlighted during 2007 or 8 financial crisis, but now it becomes quite known, whether it is implicit guarantee of government or not, or government just have a holding in that entity. So these are last year we saw a drop in issuances from quasi-sovereign in the global markets. Next slide, please. Like corporate is really, and these are global. So you are looking at all the markets which are issuing, including Malaysia, which has a deep market and it has the largest share in terms of corporate issuances. We have seen now corporate issuing from Indonesia also and other countries also, GCC also, they issue in some cases, and it has one can say yes, 20% around increase, but if you look at it, the potential for corporate is much bigger in my view. So it's a good sort of a thing that yes, they have managed to issue even this environment of inflationary environment, global and rising rates, and adjustments in commodity prices, which has stayed high in most cases. We can see how corporate have behaved, but I think the overall, my humble opinion is that there is a much larger potential for the corporate, although we see increase last year. And so far they have issued 375 or 376 billion since inception. Next slide, please. And these are FI. Again, FI have been issuing sukuk for a long time. You have sukuk issuances from FI of late, issuance in the tier 1 for capital adequacy requirement, or tier 2. And tier 1, we also have a standard of sukuk al-mudarba, perpetual. That is also also played. So FI has been there. They have been issuing sukuk, but 22. I'm repeating myself. Has been maybe a year where certain rate adjustments and other reasons could be that there is a drop. We saw a drop in 2021 also from the peak in 2020, but again there is a drop of 33. But there is some sukuk been issued with even perpetual we have seen from Saudi Arabia, some FIs, and also we have seen from Malaysia, and apart from some other countries if I'm missing, we have tried to cover those points in the report. But generally, I've noticed there's 2-3 countries have been more active in the FI side, especially GCC countries have been also active from UAE. Also, banks have been issuing like Dubai Islamic or ATF or other institutions. They have doing, or of course, Abu Dhabi Bank. We have Saudi National, other banks which are many. Which time doesn't allow me to go into those details. We go to the next slide, please. I'm mindful of my sort of time. So I have taken 15 minutes. I will, inshallah, go quickly now, and we'll, inshallah, finish as the other session and my fellow panelists are waiting. So I don't want to really take too much time. This chart you can see the role of global short-term sukuk issuances. I think we can sort of move on. You can see the role each country is playing some other countries like Bangladesh or other, Brunei continuously issue. You have, other, jurisdictions, Indonesia, Malaysia, of course, has been leading. But others are joining. Bahrain also, we have Qatar also, we have Saudi also, we have UAE, and other smaller countries also, from Jordan even, we have Kuwait also. We go to the next slide. And then you can see clearly global sukuk issuances, how, other countries, we have newer countries like Egypt, which has joined, Nigeria has joined last 2-3 years. Then Gambia issues some short-term sukuks, Senegal, and, other countries. Of course, Sudan is there, we've been issuing, but, this year could be, in terms of data, we have to keep the same. But again, they inshallah, when things again go back to normal, they're there for the sukuk market itself and issuance. And then we see the Turkey and other countries. If you go to the next slide, please. When I say in the previous slide, if you go back there, please. Very quickly, I just want to say, if I'm saying USA, it means that it's a US company based, maybe outside. So that's something one has to note. UK has issued sovereign bonds, as we know. Luxembourg has issued. But if you see, the smaller amount, although only 0.07, let's say US dollar issuance is different. But country, when we are taking the issuer where it is from. So that's the point to be noted. Not really jurisdiction itself issued. Then we go in international sukuk issuances. You can see, various countries, how their share been over the years, and the regular sort of shares. We can see, UAE, you can see Saudi Arabia, Bahrain, Malaysia, Indonesia, and other countries which are there for issuing. Next slide, please. And these are, other countries which have, you can see, they all are helping, like even Kazakhstan is helping the sukuk market. There's a smaller share, but these are all good development. And then, of course, one thing we have to see is the supranational. And these are, mostly we have separated now as compared to the previous year, is by the suggestion of VP from ISDBi, rightly so, is that these are like mostly Islamic Development Bank issuances and some other sovereign, supranational, sorry, if they have issued, like World Bank, or if they have issued previously, I know. That's it. But mostly led by ISDBi, and their share is also a big share of 30% in the sukuk market. Yeah, next slide. These are domestic sukuk issuances. You can see how the market had performed. Go to the next slide, please. Again, all the details, all the countries we have mentioned, about 27 countries, or 28 countries we have who have been issuing sukuk in the domestic market, and more have been added as we go along. Like Tanzania is quite a recent one. Egypt is a recent one. Yes, please. Very quickly, considering the time, I will sort of look at it from the structure-wise. And like I said earlier, you can see, how the various structures have been used. Even Ijara is used for short-term sukuk, which we can do. You can see the role of Murabaha. In some cases, Mudarba is also issued. You can see the Wakala. You can see the hybrid sukuk issuances, Ijara Musharaka. And then we say a hybrid, you can see in the glossary, it's more than 3, contract they've been used. So we cannot put all the contract there. So that's, we keep it hybrid. So all sukuk, you can see, at least 10 structures which are used for the short-term market. And these are there, even Salam is there also. And there are reasoning for that. And Sharia, of course, allows these kind of issuances, and there are Sharia compliant issuances which are there. Next slide, please. Then we have international sukuk issuances. You can see the structure. You can see slight shift international. You can see the share of Mudarba. Like I said, mostly could be tier 1 sukuk issuances. And of course, tier 1 doesn't carry any guarantees and all, so that's lies just above maybe equity. We have seen the case of in the conventional bond market, the sukuk credit Swiss. What happened to that? But sukuk market generally, there's a chapter. You'll see that we are thankful to the contributors who have mentioned about how the Tier 1 or perpetual Sukuk has really performed and how they behave for Tier 2 Sukuk. So you can see, the Wakala is a major share international, but Ijara is also there, which is the starting point. And then you have Ijara and they have hybrid Sukuk issuances. And you have also, Sukuk issuances of Murabaha, Mudaraba, which are generally from Saudi Arabia, which started around, if I'm correct to say, around 2017, 2018. And they continue to issue on that structure. Yeah. And these are your domestic. So you can see in domestic market, there could be, different sort of, reasoning, different requirements to issue Sukuk. So you can clearly see, different in the Sukuk structures which are being used or type of, contracts which are used and their share, in the domestic market. And these are your sort of domestic Sukuk issuances global. So you can see Murabaha. It could be Murabaha in some cases. Could be for liquidity management. It could be some cases, other, reasoning. And you can see in terms of your sort of, if you look at ESG or sustainable, linked Sukuks, finance linked Sukuk, you can clearly see that these structures remain the same. Although their principles, there are other things which is a different subject, which are there for those issuances. But in terms of the Sukuk as a structure, these are the ones which are used even for your ESG, which is a hot topic, or green. We see is a very green, and ocean and everything is coming in now. But the structure-wise, these are the structures, both internationally and domestic, which are used for that. Next slide, please. These are sort of. I'm reaching now my, the last few slides. And you can clearly see, the outstanding Sukuk have continued to increase. And we can see in 2022, there is an increase of around 14% as compared to, so outstanding Sukuk contribution from 2022 is around 152 billion. Some Sukuk may have matured also, some short term also. And overall, we see 794 billion Sukuk outstanding. And this is the figure which we, to our greatest, abilities and, efforts and all, we validated this number. So, inshallah, this number is something which is, as generally tells that, the size, we can say, confidence. It is around 794 billion outstanding Sukuk issuances, both your international and domestic. Yeah, next slide, please. And then you see the domestic share, as I have been saying, of course, it increased around 30% from previous year. So 127 billion domestic outstanding, total domestic 611 billion or $612 billion outstanding as of 2022 end. Next slide, please. These are sort of your international outstanding Sukuks. As you can see, the last year we had a drop in international institutions. So obviously, there are less from 22 which are outstanding, but about 25 billion outstanding from that. And then you have, previous year 35 billion. Total outstanding from international side is coming into 182. So around 617-18 from domestic and international. So total is 794 billion outstanding. These are the development which I will very quickly go. Again, I am really mindful of the time and I don't want to take too much time. Is really, I've mentioned about the net worth of the Sukuk, how valuable they are. I've mentioned about the ESG and the issuance. I have mentioned about achieving diversification of structure in my, and also I have mentioned about, yes, okay, I'm just finishing up. And then we have Indonesia. Next slide, please. Also, I've mentioned crowdfunding platforms. I've mentioned about trend to fixed rate. I've mentioned about, profit rates provide more trading opportunities. Of course, we have seen the use of IIFM standard on the hedging, especially like managing the fixed and floating rates and profit rate swap. And the use of hedging has increased with this volatile environment. So these are some of my sort of, key takeaways which I would like to leave you with, and inshallah, the report really provides all the information, more details, and more contributions. So with that, I'm really thankful to you all for listening. Shukran. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Thank you very much, Mr. Ijlal Ahmed Alvi, the IIFM CEO, for the excellent highlights and key findings of the year 2022 report. In general and overall, the Sukuk issuance performance is, we can say that is intact, sound, and promising, inshallah, despite some difficult circumstances. So please kindly find time to read the detailed information about the Sukuk performance in the report. Jazakallahu khairan, Mr. Ijlal. Now, our first session will commence and will be moderated by our brother, Mohamed Abdul Razak from Bank ABC Islamic. And Brother Abdul Razak, he is the Group Sharia Compliance Officer. So, inshallah, over to you, Brother Abdul Razak, and the panelists, will introduce themselves. Over to you, Brother Abdul Razak. Jazakallahu khair.
Jazakallah khair, Dr. Ahmed. Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh. So, dear brothers and sisters, first of all, I hope you are all doing well, inshallah. And I would like also to thank IIFM for organizing this important webinar on the publication of the annual IIFM Sukuk report, the 12th editions. So time flies. I do remember, the publication of the first issuance, and brother Dr. Ahmed was there. So I'm very happy to see you around again, brother Ijlal, and I hope I will be with you again, inshallah, next year for the 13th edition of this annual IIFM Sukuk report. So today I'm very pleased to moderate this important session on the global market Sukuk trends in 2022. So with the panelists, we've come up with 4 key items, starting with the Sukuk issuances by sovereigns, Islamic FIs, and corporates in 2022. Then moving on the impact on the Sukuk market due to global economic conditions and the rise in international benchmark rates. As you all know, 2022 was a bit of a tough year, not just for the Sukuk market, but for the overall, capital market, given the multiple rates increase performed by the Fed in the US. Then we will also cover the growing role of private placement in the Sukuk market, particularly in 2022, as I've just mentioned, given the high profit rate environment we were living in 2022 and still in 2023. And last but not least, we will cover the use of Sukuk in liquidity management tools, covering various instruments such as collateralized murabaha, repos, and so on and so forth. And we may also touch upon the ESG market eventually if we have enough time. So let me give you a brief introduction of the panelists, starting with Mr. Sabir Ahmed, who is an executive director in charge of Islamic origination for Standard Chartered Bank in Dubai. Then we have Dr. Hayaz Ismail, who is a director within the Islamic Wholesale Banking Division of CIMB Islamic, located based in Kuala Lumpur. Then we have Brother Mohamed Al-Nasser, chief dealer within the Capital Market Division of Kuwait Finance House, based in Kuwait. Then we are pleased to have as well Dr. Scott Levy, who is the chief executive officer of Bedford Work Capital, based in London. And then we have Mr. Debashi Day, who is a partner and global head of Islamic finance, working for White & Case LLP, based in Dubai. So if I may, I will just kick off the discussion, on the global bond and Sukuk market with a bit of a focus on the secondary market and the liquidity profile of the Sukuk in 2022. Starting with Brother Sabir, if you can share a bit, your experience and given your role on all the mandates that you've worked on in 2022 with Standard Chartered Bank. We'll also ask Dr. Hayez Ismail to give his view on the same topic, and then we'll switch to Mohamed Al-Nassar from Coin Finance House. Brother Nazir, please. Sabir, sorry.
Thank you. Thank you, Brother Mohamed, and thank you very much to IIFM and Brother Ijlal as well for giving us an opportunity to share our views in this webinar. And thank you very much. This is an excellent opportunity, an excellent platform to showcase the Sukuk issuance and the potential of this instrument within the Islamic financial space. So starting off with 2022. We have executed a number of Sukuk issuances in 2022. There were sovereign issuances, there were issuances by financial institutions, and then there was an increase of ESG Sukuk issuances as well. However, if you look at it, the overall Sukuk market, it was lower than the year before that, and it was basically in line with the macroeconomic conditions globally. So we see increased inflation, tightening monetary policies by several governments, including US. We saw a weak global market outlook, volatility in oil prices, and for all these reasons, the global capital markets was affected, and if you see the number of issuances on the conventional side as well, they were less than the previous years, and Sukuk is correlated to some extent to the overall capital market and bond markets as well. Having said that, an interesting thing that we saw with respect to Sukuk issuances only is that because of increased oil prices and some other factors, there was a lot of liquidity in the Islamic investor base, which is based in GCC and Asia. And this liquidity was basically tapped by the few Sukuk issuers that came into the market in 2022. It was a bit difficult to find the right issuance window in 2022, but we'll go through this later in my session as well. But people who were ready with their legal documents, with their structures and everything, were able to capitalize on those issuance windows and were able to issue. It was subdued, but at the same time, there were some issuers who were able to take advantage of respective issuance windows and do their issuances. Especially on ESG issuances, I would like to highlight that we saw three international ESG issuances in 2022. We saw the inaugural sustainability Sukuk by Dubai Islamic Bank. This was their inaugural sustainability issuance. We saw Riyadh Bank's sustainable 81 issuance, additional tier 1 sustainable issuance. We also saw Government of Indonesia's green Sukuk. So the amount of ESG Sukuk issuances compared to the last year was considerably higher, and we expect to see the same trend continue in the years going forward as well. Thank you.
Thank you, brother. It's very interesting input. Maybe if we can ask Dr. Hayez to also share some light on the same topic, but maybe with an angle from Southeast Asia, if you don't mind. That would be
Yes. Thank you, Brother Mohamed. Assalamu alaikum wa rahmatullahi wa barakatuh, and good day. Firstly, congratulations to the IIFF team on the launch of the annual IIFM Sukuk report, the report that I look forward to every year. And next, thank you for having me on this panel. Rather, the Malaysian perspective on this issue. Now, Malaysia continues to spearhead the international Sukuk market. It commands about 40% market share of global Sukuk outstanding and more than 40% of global Sukuk issued in 2022. Now, in Malaysia, 80% of the ringgit debt capital market is in sukuk form. So the ringgit bond market is Islamic. Having said that, we can say that the investors are agnostic as to whether it is a bond or a sukuk, as what matters is the credit, not the instrument per se. Now, what have we seen on the global front? There is a lot of Islamic money out there, but not as much supply of sukuk as Brother Sabir alluded to earlier. Now, liquidity is not a function of the instrument, it's how much money the market has. And in recent sukuk issuances, we have seen multiple times bid to cover ratio. 3 to 4 times is common. So there is liquidity, but a lack of supply. Now, on the issue of lack of supply of sukuk, from this region, Southeast Asia, the government of Indonesia is the most prolific issuer of sovereign sukuk, coming to the market at least once a year in recent times. Now, recently, their finance minister, Ibu Sri Mulyani, stated that they will be reducing the issuance of global sukuk. Therefore, in 2023 so far, we've had only one global sukuk issuance from this region, which was the issuance by Khazanah, the Malaysian Sovereign Wealth Fund. And aside from Khazanah, it has been largely GCC issuers. Briefly on the secondary market, we believe that the secondary market is relatively active due to ample liquidity, but lack of supply in the primary market. Thank you.
Thank you, Doctor. Very interesting points. Maybe we can ask also Brother Mohamed Al-Nassar from Kuwait Finance House if you can comment on the same, since it's located in Kuwait and is one of the, definitely KFH is one of the main player in the sukuk markets, and they're quite active as an investor as well. So if you can share some light, on the secondary market performance and liquidity profile of those sukuk issuances in 2022.
Yes, thank you very much for having me. It's a pleasure to be here. Like Mr. Saber and Dr. Rayaz mentioned, 2022, it's been no secret that it's a very tough year for both investors and issuers. First, I would like to comment on the primary market. After the first rate hike in 2022, there have only been 13 global sukuk issuances. Compared to the previous year, we saw 24 issuances. So that's a significant decrease. Now, because of the rate hikes and the uncertainty toward rates, as a market player in KFH, now, as many of you know, we fund these longer-term investments by short-term borrowings. So with the short-term funding for our investments going higher, the demand for longer-term sukuk has decreased. And you see that on the secondary market. Compared to the previous year, it's been very tough for issuers to find the right window to issue sukuk. And for investors, many of them prefer to stay away from the market until it's more clear where interest rates are going. Yeah.
Excellent. Thank you, Brother Nasser. It's also very interesting to get your point of view, either from the primary market perspective or even secondary, definitely. Now, I would like to discuss one subject that is, I would say, close to my heart when it comes to sukuk structuring, and what are the different kind of sukuk structures you will see between domestic issuances versus international sukuk issuances. So I would like to ask Dr. Scott Levy if he can share a bit of, if he can give his inputs, on the main sukuk structure used for domestic issuances versus the one for international issuances. Dr. Scott?
There we go. Thank you very much for the question. And it is Salam alaikum. It's a pleasure to be here. And again, congratulations on another excellent IIFM report and bringing such a fantastic panel together for the benefit of all of the listeners. I think there's a very interesting trend happening at the moment, and my focus primarily on corporates. And I would have to echo, I think, the statements of everybody that's come before me, that the domestic short-term tenors, as the data shows, but also as the kind of investor perception, the amount of liquidity is there, that uncertainty around where the right risk return level should be is forcing tenors shorter. The difficulty then with shorter tenors is that then affects the structures, combined with a sort of a growing trend which is not looking as favorably at commodity murabaha structures as they used to be, kind of echoes back the transparency aspects that our esteemed speaker from the IsDBi had echoed, that the simple profit and loss structures, a bit more transparency, focus on either the standard murabaha or in fact a mudaraba type structure from a corporate issuance to try and encourage more participation or risk sharing in the underlying transactions. The difficulty is at the short end of the market to find shorter tenors with the right kind of businesses that can afford to issue on a short-term basis. And for our focus, which is on new issuers and new corporates coming to market, it's been a very tough year because that combination of transparency, underlying asset liquidity, which is driven by the shorter tenors, and of course, the macro situation means pricing is very, very difficult. And I think the reality is that the people that are responsible for the issuances that are looking to try and price their time in the market weren't around pre-GFC, so don't have the kind of toolkit amongst their colleagues to try and navigate the interest rate environment. So I think although there is still that kind of an easy way out to go with a commodity murabaha structure, that the tendency moving to the more transparent or either ijara or mudaraba structures is something that we have had a lot more discussions about from a corporate side and at the smaller end of the market. So on traditional capital markets, yes, not digitalization, but again, focusing on that kind of mudaraba ijara structure where it's easier to track the risk return.
Excellent point. I think you point echo as well, the one that was shared by Dr. Sami from IDB. So I do fully concur with you as well. And that brings us actually to one of the key challenge, I would say, faced by the Sukuk market over the past, I would say, 2 years, when it comes to the implementation of some of the RFE Sharia standards, and particularly Sharia Standard 59. So I'm pretty sure now we know the industry is well aware of this standard. We've made significant progress, and I think most of the issuers and even GLMs are quite comfortable with the legal counsel when it comes to the implementation of RFE Sharia Standard 59. And I would be very interested to get the view of Mr. Debashi, since he's the partner and the global head of Islamic finance for White & Case LLP. So Brother Debashi, if you don't mind, if you can just step in and share your view on some of those key challenges in the implementation of RFE Sharia standard, and what are the key, I would say, implications when it comes to cross-border transactions.
Thanks very much, and also thank you very much to for those who've invited me to speak with the panel today, and also to the audience members who are listening. Actually, just circling back on what Scott Levy was saying, and in particular because it has an impact on why we think about the implementation of IOFI Standard 59. While Scott was focusing on the shorter end of the spectrum for tenor, a lot of the work I do with the banks is focusing on corporates and sovereigns who are looking for the longer dated maturity. So that end of the spectrum for Sukuk structures. And there we can see a dichotomy between domestic markets like Malaysia and Saudi Arabia, who have for many years had their own approach to structures. So for example, Murabaha type Sukuk are very, very popular in Malaysia. In Saudi Arabia, the Mudaraba structure has been really a long-standing, well over a decade structure that they've used, even for transactions where we're not talking about regulatory capital transaction, but just a pure corporate issuance, which is not a financial institution. Cross-border, though, for international deals, this is where I think the IOFI standard comes in, because unless you're a financial institution raising financial capital, meaning you would pursue a tier 1 type of structure through a Mudaraba, there is actually a lack of favor for long-term Sukuk using Mudaraba. And that is because there's a real focus on scholars today on tradability and tangibility of the underlying sukuk. So they are extremely focused on, if you're going to create a liquid tradable instrument, which is a sukuk, that certificate has to have the right percentage of tangible assets behind it to be considered tradable. And that is where IOFI Standard 59 comes in. For Mudarba sukuk, of course, could be tradable, but because IOFI has a fairly clear understanding, as Scott mentioned, that that type of instrument from a Mudarba, a pure Mudarba, is equity risk. You're sharing both risk and reward. The investor base that buy international sukuk actually don't want to share risk in the same way. They would like, for their own purposes, to be able to have a certainty of what the rating of that instrument might be, and they want to understand that it doesn't move mark to market like a Mudarba equity type instrument might. And therefore, the favored structures internationally have been Wakala for a lot of financial institutions and Ijara. And increasingly, that is the line that even sukuk issuers who are based in Saudi who wish to do an international deal have to take. They have to adopt those structures, notwithstanding they prefer maybe to use a Mudarba, which they would use domestically. And this is where the IOFI Standard 59 comes in, because the standard, as interpreted by the Higher Sharia Authority, which is a special committee of scholars who've been empowered by the UAE Central Bank, really has had an impact in the last 3 or 4 years on how that standard's been interpreted. And the rationale behind that is the central bank has said that any institution that is regulated by it, so that would be most UAE Sharia investment banks, must have HSA sign-off from before they can invest either in the primary or secondary market for sukuk. And that actually has affected both primary issuance internationally, but also secondary trading, because given the anchor investor presence of these UAE financial institutions in the global market, unless they're participating, it has a different impact on how issuers might obtain liquidity. And so we have seen the implementation of that standard out of the HSCA in the UAE gradually creep into international issuances. And their focus has been a lot on tangibility, the percentage of tangible assets they need before they're satisfied a sukuk is tradable, the impact of failing to keep that tangibility, and that often leads to delisting of instruments and an ability of sukuk investors to get out of the deal by putting the sukuk, and a renewed emphasis on structures that are more conservative in tangibility approach. So veering away from maybe more of the innovative or esoteric structures of a decade ago, and now really focusing on Wakala and Ijara. And I think that would be my summary of where we've seen the market go in the last 2 years. And to a certain extent, that has meant that it is perhaps more challenging for certain corporates to come to market, because they must ensure they have sufficient tangible assets to satisfy this criteria. It doesn't mean that the sukuk market's closed. It just means that they have to think much harder about what assets they have available and what are eligible. For FIs, financial institutions, that's less of an issue. Thanks, Mohamed.
Very interesting input. Thank you very much. Maybe I may ask Dr. Hayaz Ismail on his view on the impact eventually of those standards in Southeast Asia, but I doubt that, for instance, countries such as Malaysia implemented our fiduciary standard. So I wanted to have his view on just the local market structures over there in Malaysia, and what are the requirements in terms of tangibility for those sukuk issuances in the local market.
Thank you, Brother Mohamed. Now, as mentioned earlier, domestic market in Malaysia, we have our own what is allowed and what is accepted by the investors. And yes, as someone mentioned earlier, 100% commodity murabaha sukuk structures are quite common in Malaysia, accepted by the market, and we don't apply the AOFI Sharia standards within the domestic market. But I would like to touch on a little bit of what Brother Debashis had shared. Now, we are all well aware of the requirements of AOF Standard 59, the requirement to maintain the tangibility ratios, the need to delist if the 33% ratio is breached, and redeem the sukuk if investors opt to exercise that option. Now, in this region, we do have a number of sukuk issuers, primarily FI type of issuers, who, due to the nature of their business, they find that they can't sufficiently mitigate the risk of breaching the Standard 59 tangibility ratio requirements over the life of the sukuk. So for these issuers, on balance, they probably have no choice but to skip the UAE market when they decide to issue. Having said that, right, to reiterate that this is the lay of the land and we operate within the set parameters. What we could do before, we can't do now, so be it. It's the evolving nature of the Islamic finance and regulations, and we'll adjust to it accordingly. Thank you, brother.
Thank you, brother. If I may, maybe it's time for I would say key topic for this session. We'll try to, with the panelists, to assess the impact on the sukuk market, due to the global economic conditions and the rise in international benchmark rates. So one of the critical, I would say, impact of this market volatility created by the inflation and those rising rates. Would it, Brother Mohamed Al-Nasser, what was the impact in terms of demand in the secondary market in 2022? That will be very interesting if you can share your view on this item, please.
Yes, Brother Mohammed. Now in 2022, for the whole market, the general expectation was for the rates to continue to go up. Now, for investors in the secondary market, these conditions are not favorable to, the timing is not right to invest in long-term sukuk. Usually, even in primary market, after an issuer comes to the market, the following week or 2 weeks, this sukuk is very active in the market. You see a lot of trades going on. However, in 2022, that wasn't the case. Most investors, what I believe happened is they hedge these investments using profit rate swaps, or they hold them to maturity in their books. That's why we haven't seen a lot of activity in the secondary markets.
Thank you, brother. Maybe I think that will lead us to one of the key points, because given the high profit rate environment in 2022 and same in 2023, I believe there is a search for better return for some of the investors. Scott and Brother Sabir, if you can please step in and share your view on this. From an investor perspective, please.
Dr. Scott, is it okay if I go first? Thank you very much. Thank you. So in our experience, and I'll agree with Brother Nasser also, that due to the issue was that the increase in interest rates was with an objective, and the objective was controlling inflation. So most of the investors in the general market were not clear how many. So basically, yes, the issue was the interest rate increases, but the issue was also the volatility of the rates during the entire year. And that was a big concern for investors. Obviously, at the same time, if you look at Islamic investors, Islamic investors do not have a lot of choice when it comes to investments. In terms of dollar-based short-term securities, there is just IILM. Generally, the sukuks are in majority 5 years or 10 years, right? We have seen 3-year issuances as well. but not many. So there was any maturities that were coming up for Islamic investors, that those funds need to be put to use. So they had that liquidity, and that liquidity needs to be put to use, and that's the reason a few Sukuk issuances that did happen were able to be priced and were, in some cases a bit oversubscribed as well. Yes, because of the buy and hold nature of Sukuk investors, which is not because of the Sukuk structure. It's because of Islamic investors don't have any other choice. So whatever they get in primary, they tend to retain it rather than going long cash. So the secondary market activity was not there, but those Sukuk issuances which did happen, investors did subscribe to it, and there were some, in some cases there was some oversubscription as well. Now, in terms of how to get better yields, in our experience, the most of the investors, their preference obviously came down to short-term instruments, like reducing the tenor of the instrument, and that's the reason we saw, there is the Turkey sovereign sukuk, which is 3 years. There is a corporate sukuk, which was less than 5 years. So some issuers tested the market with shorter tenors as well, so that the return can enhance. And there were some financial market products as well, through which investors try to enhance the return on their sukuk portfolio. So mix and combination of these was used to enhance the return. But having said that, it was a difficult year from an overall returns perspective. Thank you.
Thank you, brother. Dr. Scott?
Thank you. I think the statistics that were run through at the beginning is a very much of the hard data to support what Sabir has just described, which is, as we talked about last year, with oil prices going up, a lot of liquidity was accumulating, particularly in the GCC, and that short-term issuance market plays particularly into this space. So from an investor perspective, the data is obvious, which is that the growth in the short-term market offsets the decline in the slightly longer and international market. If I was a brand, a name, or a quality issuer coming to market, it was a fantastic time to go to market, because there just, as I said, not enough issuances. Nobody really knew coming to the market. So it's very much of an issuer's market into this vast liquidity pool. And something I mentioned before, the difficulty, of course, is other people looking to issue are seeing this liquidity pool, but timing, which I think everybody's mentioned today, has been very, very difficult. So from an investor perspective, there's been a little bit of in the discussions that we've had, kind of a search, almost going back to some of the things that were popular, kind of reverting back to popular investment things, particularly real estate, which is an obvious choice, but staying away from anything that kind of looks like it might be potentially sensitive to changing consumer behavior, trends, goods, et cetera, et cetera. So it's been a very strange environment where, yes, there's a vast amount of liquidity, but even the rating agencies aren't as busy as they should be looking at new potential structures, because tenors are short, uncertainty is high, knowledge is not quite, the kind of experience of market direction is uncertain. And for short-term issuers, and I would expect the domestic short-term issuance this year to be even higher than last year. So I think we'll see that trend for probably another 12 months, encouraging, and I think this is fantastic news for the corporates. The more domestic issuances that happen, setting domestic curves for where local expectations are, will then provide a benchmark for more corporates to issue domestically. And hopefully that becomes, even if it's not great for the international market, it should encourage a broader adoption of the domestic markets, which ultimately is good for the domestic economies. So investor perspective, I think, are going to become a little bit more inward focus, except for those super quality names that will continue to attract a premium.
Excellent points. Thank you. Maybe brother Mohamed Al Nasser, did you notice also this trend shift from long-term to short-term in the Sukuk market?
Yes, definitely. Now we're going to be talking about the ILM Sukuk later on this panel. However, in the secondary market in 2022, most of the demand we saw was towards the short tenor Sukuk, talking about 2 years or less. 10 years and 5 years Sukuk, the demand was not there, unfortunately. The reason for that is investors can measure their cost of funding in the short tenors. That's why we saw a lot of Sukuk maturities in 2023, even 2024. These were the most demanded Sukuk.
Agreed. I think even in ABC Islamic, out of our Sukuk portfolio, same thing. We had this view internally to also focus on the short dated Sukuk rather than going for the long term. Anyway, so that's a very valuable point. Again, thank you very much, brother Mohamed. I think that would lead us actually to the third point for this session on the role of private placement in the Sukuk. And I think this point is extremely relevant given the difficulty for some of the issuers to tap or to access the Sukuk market in 2022. So rather than going to the public market, pretty sure that a few who had already a program in place went through the private placement route. So brother Sabir, I think I'm pretty sure you've been involved in few transactions. I will not ask you to name them, obviously, because those are private placements. So if you can share a bit, if you can share your view on this important topic. I will request as well, maybe Dr. Scott Levy as well to share his view, and then possibly, if times allow, Dr. Hayes Ismail.
Thank you very much, Brother Mohamed. So, yeah, in our experience, obviously, as you have mentioned, the private placements are by nature, private transactions. But what was important in this year was the issuers who have set up their programs, who have established their Sukuk programs, and their documentation is in place. They were able to find the right issuance windows, and were able to place or issue private placements in different amounts to interested investors, and we saw this theme going on during the entire year. What was the benefit for the issuers was when this was because the overall market, the public issuance market, was not as open, or was not open most of the year for public issuances. These issuers were able to issue and raise liquidity for their needs. At the same time, even this private placement market was beneficial from the investor's perspective, as I mentioned earlier, because of maturities coming up and the increased oil prices. The investor base had excess liquidity, and that excess liquidity they wanted to put to play. But at the same time, they were interested in shorter tenors as well, so that they don't lock up their liquidity for a long time. So these private placements basically merge together the requirements or the interest of the issuer as well as the investors as well. So the tenor is based on the choice of the issuer and investor. The pricing is based on the decision or on the agreement between the two parties. So from that perspective, it was a win-win situation for both. Another aspect from where the private issuance market is very important is that these issuers, obviously, because of increased volatility in rates, if they go for a public issuance, then in a way it affects their market curve as well, and that may impact their future issuances. By doing a private placement, that pricing does not affect the overall public curve of that corporate or sovereign. So that was an important angle as well, because of which we saw a few private a few private placements in the market during the year.
Excellent input. Thank you. Dr. Scott?
Thank you. I would have echoed in fact, I can echo many of those similar points about, the advantages of the private placement market, where we've seen that reaction against the way the curve is working. A private placement therefore can go on the books at cost, can be held to maturity without any balance sheet impact, because obviously the nature of the private transaction. The thing that I've seen that's most interesting, and again, this comes back a little bit to, again, the discussion about tokenization and digital, is that investors using the program, first of all, using program approach to give themselves the timeliness and the flexibility to react quickly, but doing so by using some, I'm not going to call it tokenization, but more of a legal tech. So taking advantage of the fact that things like IIFM standard documentation gives them then an ability, by using some technology, to be able to react quicker. And because it's a private issuance, not requiring the input of a financial institution. So their cost to market, their time to market, by creating a program, kind of a private program issuance, reduces some of the cost, considerably, the cost and time of issuance. And it's that combination of technology. And I think this is echoing something that happens more in the retail domestic space, is non-bank driven transactions, using some technology and platforms to be able for them to be more opportunistic, for investors to be more aggressive, because they then control more of the process. I think that's been a very interesting trend in a way to deal with the uncertainty, but also to deal with the speed and ease of issuance by kind of essentially a non-bank operation.
Mohamed, can I make a comment actually on what?
Absolutely, please, by all means.
Our colleagues have just said. I just, from a lawyer's point of view, what I obviously want to make sure that we're very clear in setting the scene is that almost all international issuance of Sukuk are done on a private placement point of view from a legal perspective, right? We're not doing retail listed offerings. So what we're clearly talking about, what Sabir and Scott are talking about, is a slightly different type of private placement than the ones we're used to in the big offerings that we've seen for sovereigns and corporates, and which our report, put out by IIFM has been tracking in terms of statistics. For the private placements, for the big jumbo type of benchmark issuances, we shouldn't forget the scale of work that's required by issuers to come to market. They need to bring in auditors. They need to have their team sit down and work with lawyers to write disclosure. They need to work with the arrangers on road shows or marketing. They need to think about a timeline for listing. It's a long process, and it requires an efficiency or economy of scale, which sometimes only makes sense when you really get to a large number, something above $100 million for issuance size. And where we've seen private placement really work cleverly for smaller companies is in those companies who are really looking for a lot less. They're looking for 20 million or 25 million. Maybe they're in a brand new sector. We've certainly had some successful examples coming out of the UAE where they're in agri-tech type business or a new type of fast growth company. They want to tap Islamic finance, but there's no way they're going to raise more than 20 million. They're basically a cash positive business without a lot of assets, and they're still growing. This type of private placement we're talking about, I would say, is a very custom kind of almost syndicate or bilateral approach, where they go to a select group of investors, very small, maybe 2, maybe 3, and they say, let us work together to design something that works for your Sharia board, that works for you commercially, but takes into account that we may need to amend as we go. As we grow, maybe our Sukuk is 2 years, 3 years to maturity, but we will have to talk to you and tweak it because we're growing. That's very difficult to do on a big international private placement. The holders are anonymous. We'd have to do a consent solicitation. In these smaller deals, you can call up the person who's holding your Sukuk and say, look, we've changed, we're better, but let's redesign the thresholds or the triggers that we're holding our growth back. And I think that is a growth that's very positive for the Islamic finance market. Of course, these are private deals, so they're harder to track, but we're definitely aware they're happening.
Thank you, Debashi. And please feel free to jump in at any point of time. Honestly, this was a very good input from your side. Maybe that would lead us, because I'm mindful of time. Unfortunately, we don't have much time left, but I would still like to cover the last point on the use of Sukuk in liquidity management tools. And I mean, we've noticed this growing trend, among the sovereigns who started, issuing short-term Sukuk. Obviously, CBB, Central Bank of Bahrain, was one of the pioneers and started issuing domestic Sukuk locally for a long time. Then we've seen a new entrance, Saudi a couple of years ago, put up the program, starting issuing Sukuk domestically through this Murabaha structure to suck up the liquidity from the Islamic banks. Then Malaysia also was a pioneer, Indonesia, and Turkey. Now we've seen also, interestingly, the Central Bank of UAE starting issuing short-term Sukuk. So may I ask eventually, Brother Sabir, since you are based in Dubai, and I'm pretty sure you've been involved in those discussion when it comes to on this UAE short-term, on this dirham-denominated short-term Sukuk. And Sam, if you want to comment on the latest program of Sukuk issuances put up by the government of by the Kingdom of Saudi Arabia. And then I will ask Brother Mohamed Al-Nasser, since he's one of the key primary dealer for the IIFM Sukuk program, to comment on the same.
Absolutely. Thank you very much, Brother Mohammed. Yes, in May 2023, UAE government, Ministry of Finance, in collaboration with the central bank, started their dirham-based local currency program. Now the benefit, and there are a number of countries, as you mentioned, who have their own domestic government programs, including Bahrain, Saudi Arabia, Malaysia, Turkey. So and this was a very good program from the UAE Ministry of Finance, and one of the benefits of these programs is that it's a liquidity management tool for the onshore banks in their own currencies, right? So the structure of this program was based on a combination of use of haq rights, lease of use of haq rights, and commodity muraba. It was because it wasn't. Through the central bank, it was AOFI compliant. So the High Sharia Authority of UAE Central Bank has issued a fatwa on this program. There are different tenors which are possible under this program, and there have already been 3 issuances under the UAE local currency program. We are one of the primary dealers for that. These are highly successful. All 3 issuances were oversubscribed, highly successful, and I think the outstanding amount is around 3 billion dirhams, which is expected to go even further in the coming years.
Thank you. Brother Mohamed Al-Nasser, since you are one of the, I think KFH, if I'm not mistaken, is one of the primary dealer in those IIFM Sukuk issuances.
Correct, yes.
So how important are those issuances from IIFM in terms of like liquidity management for the Islamic banking market or for the Islamic financial market as a whole?
Yes, very important. Now, in 2022, the ILM became increasingly attractive, especially with the higher rates on the short-term tenors. As you know, the ILM issue usually 3 tenors, 1 month, 3 months, and 6 months. Now, these sukuk, they also help with the regulatory ratios for financial institutions. For example, our central bank in Kuwait considers them as high-quality liquid assets, so they help us in terms of the ratios. Now, surprisingly, in 2022, compared to 2021, the subscription levels for the ILM actually increased, unlike other sukuk. We have also seen activity in the primary and the secondary markets much higher than 2021. Now, this tool is useful for, like I said, for banks, for fund managers that are looking to deploy funds for short-term tenors, pension funds, corporates, and even recently, we have seen some interest from retail banking clients, which for us was a first. So yes, ILM is very successful and continues to be successful.
Excellent. That kind of echoed the trend that you've highlighted before in terms of like the trend shift from long dated or long-term assets to short-term. So maybe that's why you've noticed as well this pickup in terms of subscription when it comes to those ILM Sukuk issuances in 2022. Maybe I think we can, one of the last point that we can cover on the same topic. I'm still mindful of time, but maybe we can extend it by another five minutes if Brother Ijlal allows us. Will be to discuss how important as Sukuk, in the repo market, because I'm pretty sure Brother Nazir, Dr. Ismail, and obviously you, Brother Mohamed, quite involved when it comes to the repo market, or either through collateralized murabaha, the standard that was developed by the IIFM, or eventually the new standard that will come at a later stage on the double wide structure. So if you can share your view, Brother Sabir, on how important are those instruments for the Sukuk market as well, in terms of liquidity management tool.
No, absolutely. And I think this topic is very closely related to the previous one as well. So the domestic sovereign Sukuk issuances, if we have more issuances under those local currency programs, then those certificates, because they are sovereign certificates, can also be used for Islamic repo transactions. Islamic repo double WAD is a very interesting product. It's in our experience is very easy to execute. It doesn't involve commodity murahaba, so there is no lag between the settlement date, between the pricing date and the settlement date. It can be done at the same time. There is no operational cost attached to it, so it's a very good structure. Where an Islamic repo basically provides opportunities for any local investors to raise cash against their holding. So these domestic programs, obviously international dollar sovereign Sukuk issuances are there, but these local currency sovereign Sukuk programs have helped a lot, and Islamic repo has the potential to further develop the Sukuk market. In addition to that, there is another product, which is Sukuk collateralized funding, where the pricing which can be offered to a customer can be reduced by taking Sukuk or sovereign Sukuk as collateral. So effectively monetizing your holdings. So we believe that both issuance of local currency sovereign Sukuk and the product Islamic repo Sukuk collateral funding together will be very important for further development of the entire industry.
Brother Mohamed, is it one of the tools that you're using currently at KFH?
Yes, yes. Like Brother Sabir mentioned, now another advantage. He mentioned pricing, but from our point of view, there is also something very important, which is it provides us a source of reliable funding. Now, when we sign a collateralized murabaha agreement with a counterparty, usually they commit to funding us for 2 or 3 years. So in terms, whenever we face shortages in the market, we can always rely on collateralized murabaha for funding.
Agreed. Excellent point. And I think we've noticed the same trend within ABC Islamic. Maybe I think last but not least, if we can wrap up the session with a last item that we would like to cover. It's also a topic close to my heart, and I think it's one of the key item to consider nowadays. It will be covered through another session, but I would like to get the view of Debashis and Dr. Scott on the development of the Sukuk, sustainable Sukuk. There are more and more insurances. I think yesterday we had another one announced by corporate in the UAE, and so if you can just walk us through the key requirements when it comes to putting up sustainable sukuk.
Scott, should I go first and then
Absolutely.
yeah. So I mean, I think the key point about sustainable sukuk is that the vast majority of sukuk that we're talking about are a use of proceeds. So that's not sustainability linked. So sustainability linked is a slightly different model where the profit rate you may pay will go up or down depending on whether you're achieving certain targets on ESG goals. The vast majority of sukuk we are seeing that are ESG compliant are really looking at raising proceeds and then specifically saying we have a use over the next few years for specific ESG type projects that we might do. So we might deploy that money in a particular way. So for example, a bank might raise a sustainable sukuk and say, listen, we will designate $250 million of this, the value of the sukuk we're raising to actually, generate business where we will specifically do types of financing for customers who are only doing ESG compliant projects. And here's the list of the kind of things we're thinking about. Now, this requires a couple of things for issuers before they can go to market. They actually have to have a sustainability framework. So you can't just automatically say, I'd like to do an ESG compliant sukuk unless you've adopted a sustainability framework. Now, if you're a big issuer, then you're probably going to adopt that framework by bringing in an outside consultant, working with them, and looking at your whole business, your governance, your social welfare, your green credentials, your recycling programs. It's a big corporate change. But if you're smaller and you're not able to perhaps spend the money or have the resources to do that, there are frameworks that can be adopted. And we've seen that in local jurisdictions where smaller financial centers, stock exchanges, or otherwise will publish a framework and say, as long as you follow this framework, we will say that that is ESG compliant. And I've seen recently, for example, the ADGM has published a framework for ESG. So there are different ways of approaching this. The big corporates, like the one that Mohamed has mentioned that announced an ESG sukuk yesterday, they already have a sustainability framework that they adopted back in 2019. It's a corporate-wide global one, and they spent quite a bit of time and resources to do it. And it's monitored and thought about, and it's in their annual report. But I just want to emphasize that it doesn't mean that you have to be a huge company with massive resources. There are different ways to achieve this. Over to you, Scott. Go ahead.
Thank you. I think it's an interesting point. I mean, look, the sustainability agenda is almost on every global investor's lips. It doesn't matter where you are. This idea of sustainable investing is driving trillions into it from a conventional side. And I think there's a unique opportunity here, is that the cost of compliance is not to be underestimated. As Debishi says, if you're a big listed corporate, you're probably reporting it anyway, and there's lots of Bloomberg data to help support this whole drive to make transparency around how the business conducts itself in the world around it. The good news is that from a Sharia perspective, this idea of a company that has a positive influence on its environment and the way in which it conducts itself in respect to its community is kind of embedded in so many companies run in that manner that there's a natural alignment. And that's great news, because the reality is, as much liquidity as we've talked about, how much liquidity there is in the GCC and into the environment, this is a fantastic opportunity for issuers even to issue sustainable linked sukuk with just maybe a little bit of a less emphasis on the sukuk side, to look at conventional investors. And I think this is probably the crossroads where looking for new sources of capital, even if you're not a household name and maybe you're a new issuer coming to market, if it's coming under a sustainable ESG framework, which is aligned with the conventional thinking, there's a fantastic opportunity to kind of open out that investor base into the fundamental ethical considerations that drive any Sharia compliant business and how it operates. And I think following whatever frameworks they're developing, that internal resources to support and report on conduct is a natural part of a company's engagement with its community and how it operates. And I think this is a great chance to join the mainstream conversation, which means that Sukuk issuance potentially in this sector could increase 2, 3, 4, 5 times, because conventional investors are equally looking for the same kind of stories. So I think we're at a real crossroads. You know, things like the ADGM and the local markets helping to support that. The only thing that I would suggest is, and we've seen conventional investors looking at Sukuk issuances, but what we've had to do with our potential issuers is to kind of realign a little bit the language so that people are not getting deeply involved in the form of the Sharia that's involved. They're looking at the sustainable and ethical considerations that drive that business, and that attracts global investors. I think that can only be good news for the industry overall.
Absolutely, and I think a few sovereign investors and corporate issuers, sovereign issuers and corporate issuers understood that, such as the government of Indonesia and other issuers. I'm a bit, concerned about the timing, so I think we'll have to close the session. It was a very productive session. I would like to thank all the panelists for their valuable inputs. It was a pleasure to moderate the session with all of you, and I hope, inshallah, we'll repeat the same exercise next year for the 13th edition of this annual report issued by IIFM. And I would like to thank all the attendees for attending this session. And I would like to hand it over to Dr. Ahmed and Brother Ijlal to conduct or to introduce the session number 2. Assalamu alaikum.
Tabarakallah. Wa alaikum assalam wa rahmatullahi wa barakatuh. Thank you very much, Brother Abdul Razak, mashallah, for the excellent, moderating the session. And also thanks go to our respected panelists. No doubt it is an informative session and excellent discussion on the Sukuk issuances in different jurisdictions. But still, we say, despite some difficulties mentioned by the high regard and professional panelists in Sukuk issuances in 2022, and as we might understand it, but we remain optimistic, all right, about a bright and promising future of for the Sukuk that, without doubt, form the backbone of this blessed industry, right? So we thank you very much. Really, we really benefit from all of them and all of you. Thank you very much. Jazakumullahu khaira. So thank you very much. Thank you very much. So now we will have a 5 minutes break for refreshment. Inshallah, we'll see you 12:05, inshallah, Bahrain's time. Jazakumullahu khairan. 5 minutes break. Thank you very much.
DDCAP Group operates in the global wholesale financial markets, providing intermediary services globally to financial institutions that adhere to Islamic and other responsible codes of financial practice. Ethos AFP was innovated to support the interbank and capital markets trade requirements of Sharia-compliant financial institutions. In 2021, DDCAP announced Ethos Terminal, the latest evolution of Ethos AFP, a multiple award-winning automated trade and post-trade services platform. Ethos Terminal brings additional integration functionality to DDCAP clients via an open market environment. This enables users full discretion in choosing trade counterparts and has been developed in response to user demand and Sharia preferences. DDCAP continues to invest in Ethos AFP, working with partners to deliver cost-effective, fully integrated automated solutions to provide our clients with a dynamic platform for their treasury and capital markets activity that also aligns with their Sharia, sustainability and corporate responsibility requirements. DDCAP aspires to connect the global Islamic financial market responsibly, and the development of Ethos AFP and its functionality is integrated within DDCAP's corporate policy formation, including our Sustainable and Responsible Actions Programme and the review and validation processes and procedures of our esteemed Sharia Supervisory Board.
قصة النجاح اللي صارت ويعيشها بيت التمويل الكويتي اليوم بدت من سنة 77 لما تقرر تأسيس أول بنك إسلامي بالكويت، وبدأ منها التاريخ خطواته الثابتة لأهدافه الأكبر ويكسب ثقة مساهمينه وعملائه أكثر وأكثر، وبدأ يكبر وتكبر معاه الإنجازات ويقود المؤسسات المالية في ابتكار وتنوع الخدمات سواء اللي قدمها للأفراد أو الشركات. تعدى نجاح بيت التمويل حدود الكويت وبدأت خطة التوسع والانتشار بدول مختلفة في الوطن العربي وآسيا وأوروبا، وتحول من أول بنك إسلامي بالكويت إلى واحد من أكبر البنوك الإسلامية بالعالم. ولأن بيتك عاصر جميع الأجيال، ولأن بيتك يسعى للتطور في كل مجال، يقدم بيت التمويل اليوم نقلة نوعية في الخدمات المصرفية الرقمية والتحول السريع لدخول عصر جديد مع مواصلة الالتزام بالعمل وفق الشريعة الإسلامية. كان ولا زال بيت التمويل الكويتي على قمة المؤسسات المالية الإسلامية بالعالم.
Constant is change. See the world through an alternative lens, where economies evolve, borders blend. And one thing remains certain: global businesses need a safe harbor. Welcome to Labuan. Discover a jurisdiction built on the strength of its past. Labuan IBFC, the International Business and Financial Center of Malaysia, intermediating your world. Promoted by Labuan IBFC Incorporated Sendirian Berhad, the official marketing agency for Labuan IBFC. Regulated, supervised, and enforced by Labuan Financial Services Authority Malaysia. Governed by the Ministry of Finance Malaysia. Expect a fiscal and currency-neutral environment. Financial intermediation at its best. Robust and well-regulated center, conducive for business growth, where international standards are sacrosanct. A wholesale finance and business intermediation center with an eye on the future. Anchored by intermediation, innovation, inclusion. your ideal intermediation hub for business, investments, and risk, where businesses thrive. In banking, corporate structures, Islamic finance, professional service providers, wealth management, capital market, and digital financial services. Let us be your Labuan. Labuan IBFC, the International Business and Financial Center of Malaysia.
Okay, we start. Once again, Bismillahirrahmanirrahim. Inshallah, tabarak ta'ala, we will go for our session 2, which is special presentation for the Islamic Development Bank Sukuk issuance, and it will be presented by our brother Zaki Battan. Over to you, Mr. Zaki. Jazakallahu khair.
Thank you, Dr. Ahmad. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam wa rahmatullahi wa barakatuh.
Bismillah ar-Rahman ar-Rahim wa salatu wa salam ala ashraf al-anbiya wal-mursaleen Sayyidina Muhammadin wa ala alihi wa sahbihi ajma'in, amma ba'd. A very good afternoon to everyone participating in this webinar. On behalf of the Islamic Development Bank, I would like to express our thanks to the organizers for inviting us to this webinar and for all the efforts that went into organizing this important forum. Let me begin by congratulating the IIFM team led by Brother Ijlal for their commitment that led to the 12th edition of the IIFM Sukuk report, which is a flagship publication for the Sukuk and Islamic finance industry. May Allah bless you all with more strength, continue playing such an important role for the industry. Ameen. In my presentation today, I will be taking you through the IsDBi Sukuk story and how it was evolved over the past decade. Let me share my screen. Okay. So the Islamic Development Bank issues its Sukuk through a medium-term note program with a bankruptcy remote SPV that initially in Jersey and now in Luxembourg. You know, we issued our debut Sukuk back in 2003 on a standalone basis, and then saw the benefits that we established a program for it back in 2005. Initially, it had a size of 1.5 billion. Over the years, this has been upsized to 25 billion currently. And of course, this is the program is listed in the Euronext Dublin, and we need to do annual update via full update or supplement as needed. We also do multiple listings. So initially we did in London Stock Exchange, then currently it's in Euronext Dublin and Nasdaq Dubai. The past couple of years, we've seen the funding issuance program around 4 to 5 billion, and we fulfill our funding usually through US dollar public transactions that has as a benchmark size of 1 billion up to 2.5 billion, or through private placement, which I will touch upon later. Why do we do so much funding? Is because in order to support our 57 member countries. In fact, the IsDBi has a realigned strategy that was approved for 23 to 25. And basically focusing on the strategic objectives of boosting recovery of the member country, tackling poverty, driving green economic growth. That stands on 2 pillars, mainly green, resilient, and sustainable infrastructure, and inclusive human development capital, with the normal cross-cutting areas of Islamic, finance, climate change, women and youth, and capacity development. For this year, for instance, the bank is targeting approvals worth of $4 billion. So you can imagine that the equity contribution is not enough. That's why you need to mobilize resources from the capital markets. So the IsDBi embarked in its journey to become a frequent issuer back in 2009, and that's immediately after the last global financial crisis, as the member country were requesting more intervention by the bank. And since then, the bank has become a frequent issuer in the US dollar space. And inshallah, the aspiration is also to become a frequent issuer in the euro space in the future. You can see here, over the years, the annual funding volume has been increasing as it shows our interventions in the member countries. Now, to date, we have issued more than $42 billion worth of Sukuk. That's around 62 issuances under the program in multi-currencies, such as US dollar, euro, GBP, and others. Currently, as of end of August, there is around 22 billion worth of outstanding Sukuk. Of course, the structure that the IsDBi use is the Wakala structure, which the underlying Sukuk assets consist of mainly project assets plus treasury assets. Project assets are mainly sovereign financing, as majority of our assets are sovereign guaranteed, and the majority of the project assets also qualify for label or thematic issuances, which I will touch upon later on. And on how we do our funding, the majority of our funding is done in the public space. You can see in the pie chart in the left, and around 84% done in the public space. Around 16% are done in private placement. Private placement is usually to tailor-made to the investor requirement. In terms of currency, the main currency that we still do business is in US dollar. However, we have been seeing increasing euro requirement from the member countries. Now, the IsDBi is fully committed to the United Nations Development Goals. The SDGs are an integral part of the bank's strategy, policy, reporting frameworks. In fact, an example that I can mention here is that when the SDG came out in 2015, we did not have a climate change function in the bank. And over the year, that became a function, a unit, and now considered a division, which shows the commitment of the bank. Here we have a glance at the various sectors and policies mapped by the SDGs, just showing you how strongly the SDGs are integrated across the board. And as discussed in the previous session, you cannot issue a thematic issuance, whether it's SDG, green, social, sustainable, without having a framework. So the bank in November of 2019 established a sustainable finance framework, which basically allow the Islamic Development Bank to issue green, social, and sustainability Sukuk. Of course, when you establish your framework, a second party opinion needs to rate it. And we selected Cicero from Norway to do that. And we achieved a strong rating of medium green shading, which is similar to our peers at the IFC, African Development Bank, and KfW, to name a few. In that exercise, we identified, looking at our project assets, roughly 6 billion worth of eligible projects. As you can see, it's a breakdown into green and social assets. The green assets were mainly in clean, transportation, energy efficiency, environment, sustainable management, pollution prevention, renewable energy, and sustainable water and wastewater management. As part of the social assets, it's basically affordable basic infrastructure, employment generation, affordable housing, and access to essential services. So we identified back in 2019, 6 billion worth of projects under the eligible criteria that is based on the International Capital Market Association. And since then, we have issued almost 5 billion worth of thematic sukuk. The first one was the first ever AAA rated green sukuk. And of course, Abu Dui will mention that she issued first the green sukuk by sovereign by Indonesia. We came after that. It was a euro denominated 1 billion with the lowest coupon ever. And in June of 2020, when we were reeling from the pandemic, the bank issued the first ever sustainability sukuk that was focusing on COVID, amounting to 1.5 billion with a very low profit rate of less than 1%. And back in 2021, we issued the largest sustainability sukuk by the bank, achieving a 2.5 billion with a profit rate of 1.2%, where 90% went to the social projects and 10% went to green financing. Now, as mentioned also in the previous session, when you issue these kind of issuances, you need to also do reporting. So this is just a glance on the impact reporting that we had for our green sukuk that was issued in 2019. For example, more than 1,000 megawatt of clean energy generation installed in the energy sector, more than 10,000 direct and indirect job creation in the relevant areas. Now, maybe I'll shift to a more recent. As I mentioned earlier, that we usually target issuance sizes per year of around 5 billion. In fact, the management has approved the funding program for the Islamic Development Bank amounting to $5 billion. Currently, we are roughly at the 50% mark. In Q1 of this year, the bank issued the benchmark US dollar issuance amounting to $2 billion, which had a coupon rate of almost 4.6%. Now, if you look at the investor demographic stats, central banks led the lion's share with around 60%, followed by bank treasuries, which are many of you are currently here attending, and we thank you for your support, and then fund managers around 3%. Now, in terms of geography, of course, MENA still leading, and we thank you all for your support with around 58%. And of course, we are doing a lot of investor work in order to diversify the investor base. That's the reason why we are also seeing an increase in Europe investors. In fact, what was mentioned earlier in session number 1, when we started issuing thematic issuances, we've started to see new investors that would not have invested if we did not using the labeling. So we do encourage, and we are actually happy with the progress that has happened in the past year. And the fact that COP28 will be hosted in the UAE, which is also a member country, is actually very good progress to see the issuances that has happened so far this year. I think with that, I would like to thank everybody once again for listening to me today, and I'm looking forward to hear from Pa Arif and Ibu Dui for their intervention, inshallah. And grateful again to all the investors who placed faith in the IsDBi. With this, I conclude and would like to thank everyone for their time and kind attention. Thank you. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam wa rahmatullahi wa barakatuh. In Arabic, we said, khairul kalami ma qalla wadal. MashaAllah. Thank you, Brother Battan, for this excellent, really informative, presentation on IDB. And the role of IDB in developing this blessed industry is not something strange to all of us. So we pray to Allah Almighty, for those in charge of IDB to continue helping the industry as they do always. Once again, thank you very much. This is my first time to see you, but mashallah, I'm impressed, really.
And inshallah, we'll see you more, inshallah. Thank you, everyone.
Jazakallah khairan. Barakallah. So, brothers and sisters, now our third session will also be running now. It will be country focus, growth of Sukuk market in one of the beloved, country in our hearts, Indonesia. So I would like to invite, Sister Due Irianti, Director of Islamic Financing, Director General of Budget Financing and Risk Management, Ministry of Information, Ministry of Finance, Republic of Indonesia, as well as my abang, brother Arif, Executive Director, Head of Sharia Economic and Finance Department from Bank of Indonesia, to present the growth of Sukuk market in Indonesia. So over to you, sister. Barakallahu fiki.
Yeah. May I ask Pak Arif, would you go first or I have to go first?
I think ladies first is better lah. Ibu Dwi, monggo Bu.
Okay, thank you. May I share the presentations? Is anyone see my presentation?
Yeah, Bu, is clear, Bu.
Okay. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Good morning and good afternoon from Jakarta to all prominent speakers and distinguished participants in this great seminar. Really appreciate to the committee to invite me to take a part in this important forum. Allow me to continue tell you the success story of Indonesian sovereign sukuk, both in domestic and global market. Thanks. Okay. I will start with showing you the overview of Sukuk Negara, the name of Indonesia sovereign sukuk. It was started in 2008 with developing a strong legal framework by an instrument-specific sukuk law. We issued our debut sukuk in domestic market in IDR currency with size of 4.7 trillion IDR. Furthermore, in 2009 to 2012, we developed various innovation, including retail sukuk, hedge fund sukuk, and global sukuk, and sukuk for institutions through auctions. Between 2013 to 2017, we developed sukuk to finance government projects for infrastructures such as road, bridge, school buildings, railways, arts dorm, etc. And I think I will show you later on about the picture of that infrastructures that we already funded by sukuk issuance. In 2018 up to now, we accelerate our sukuk for green project. We call it green sukuk. I think Brother Zaki already mentioned about it, and social sukuk both in global and domestic market. Next, sukuk negara or our sovereign green sukuk, up to now total of sukuk issuance already reached 2,400 trillion IDR, both in IDR as well as USD denomination. With outstanding as of August 2023 is about 1,030 390 trillion, or total sukuk mature accumulated of 1,007 trillion. If we see from distribution by method, 60% issued through auctions. We do auction twice a month, and we publish the calendar of issuance on December -1, and also distribution by currency. Most our issuance in IDR with 85%, and in US dollar about 15%. And US dollar is not necessary through global market. We also issue in domestic market in denomination US dollar. For example, for Ministry of Religions now is replaced by PPKH, who manage the Hajj fund. They can also placement in US dollar in domestic market. And we can see for sovereign sukuk is about 20% market share compared to the whole issuance of government securities, because governments also issue in what we call conventional securities, or we call it sukuk bond, or we call it sukuk, not sukuk, surat utang negara, or government bond. Here for sukuk negara infrastructure, we also develop what we call it primary dealership system, and also we promote for benchmark series. The purpose in developing this market infrastructure is to maintain and increasing the demand for sukuk negara auction by the commitment to win a specific proportion, thereby reducing market risk and financing risk, and also to increase competition to encourage the efficiency of pricing creation, thereby reducing the cost of borrowing, and also create the transparent price discovery method through two-way price quotes and improving sukuk market liquidity. For development of the online platform for retail sukuk, we developed in 2018. That one is a blessing because 2 years before pandemic, before COVID-19, we already have that platform. So we can reach out the domestic with retail investor or individual investor by having this platform, so people can buy or participate in this instrument from their home at any time, 24 hours, 7 days during period of delivery of this sukuk. And this year, the government adding for distributions, because for retail sukuk, we also appoint a bank and then a securities company, and we appoint them to help us to issue this retail sukuk. And also adjusting investor maximum order limit by more and more demand from individual investor. We increase the limit from 3 billion to 5 billion for retail, and now even we increase to 10 billion for maximum order. And then for this one is to show you the performance of sukuk negara, where trading sukuk has increased in line with the rising number of tradable sukuk negara issuance. That one is implementation of implementation of primary dealers, where the implementation of primary dealers we do in 2020. Before 2020, we use the auction participants, where they don't have obligations to do trading in the secondary market. So that one we can see from the chart in 2023, the average daily trading increased a lot from 2.9 trillion in 2022 increased to 5 trillion in 2023. Compared to sovereign sukuk, corporate sukuk, you can see here it's very limited issuance. Since 2002 until September 4, 2023, the total issuance only 94.16 trillion IDR. And then if we see the total of corporate sukuk mature accumulated from 2002 is about 48.97 trillion. That one is only about how many percent here? About 12% of sukuk in the market. So I think most of sukuk in the market provided by the government. Here we would like to show you the innovation of sukuk negara. Indonesia not only become frequent issuer, but we always do innovation to show the market that we can do more. For example, in 2013, we start to finance the project sukuk, directly funding various projects. I will show you the picture later on. And in 2018, our innovation not only on the green sukuk, but also in online retail sukuk. And continue 2019, we also produce what we call project MONEF of project financing sukuk. It means that because we manage a lot of projects, but we only have about 12% who handle or manage this project. So we develop a MONEF of project financing sukuk to make easier to do monitoring and evaluation for the projects. Now we already have about 5,000 of projects spread out on the in 34 provinces. Sorry, I think we lose the picture. Wait a minute. Can you see again for the picture?
Yes. Like
sorry for that. Thanks.
It's
okay.
It's okay.
Okay. I think I will continue for the innovations, and the current for the current innovation we have cash coupling sukuk that I think all of you already know about our achievement as the first winner in the prize for impactful achievement in Islamic economics conducted by IsDBi. And I think cash coupling sukuk is to support the development of Islamic social finance, and the first issuance in March in 2020 through private placement, while the retail cash coupling sukuk was the first time we issue in November 2020. Since 2021, the order of retail cash coupling sukuk has been conducted via online platform for individual waqif. And we just closed for the fourth time issuance in cash coupling sukuk retail, and we got more and more waqif. And in terms of size, last year we got 38 billion IDR, and we just closed this week with total size 112 billion US dollar. That's improved a lot. I think that one is because we already got achievement prize from IsDBi, so more and more people know about cash wakaf link sukuk. So thank you for IsDBi to give us a prize, and we already got also a prize in US dollar, about 100,000 US dollar, and we use this price to support cash wakaf link sukuk by doing wakaf. That money we use to invest in cash wakaf through Badan Wakaf Indonesia. Next, prospect and future further development. We support for environmental eligible aspect for sukuk issuance. We see that the increasing acceptance of environmental, social, and governments worldwide has increased a potential opportunity, of course. And Indonesia SDGs government securities framework we already developed in August 2021 gives strong support for green sukuk and blue sukuk issuance, and also for SDGs. And sukuk negara issuance using SDGs government securities framework scheme in the international and domestic market continuously as government full commitment to climate change mitigations. And you know that we issue not only in global market for green sukuk, but we also issue for green retail sukuk. And our issuance in green retail sukuk just proven that millennial investor get more and more to issue in this instrument. And social sukuk, we call it cash wakaf link sukuk, also increase literacy and public awareness of cash wakaf, since people in Indonesia only know about wakaf, about we call asset wakaf, but not cash wakaf. But by introducing cash wakaf link sukuk, now more and more people know about cash wakaf. And also supporting cash wakaf fundraiser and institutional strengthening of Badan Wakaf Indonesia, Nazir, as well as Islamic Bank. Because as a selling agent for cash wakaf link sukuk have to be Islamic Bank, not a conventional bank. And also cash wakaf link sukuk exploring infrastructure financing and social programs activities through cash wakaf link sukuk. So we can see that cash wakaf link sukuk support the achievement of the SDGs target. So we just dreams in the future cash wakaf link sukuk can support more and more for our budget. And then for further development about issuance infrastructure enhancement for millennial generation participation through capital market by having platform digital, we saw that increase in significantly for participant for millennial generation in invest on our sukuk. And for project financing sukuk development, we trying to expand the scope. For now, we just using for base used by central government project, but we just finished our regulation. Will expand to finance the project from regional government as well as state-owned entities. Here, before I end my presentation, I would like to show you contribution of sukuk negara. We can see here the picture. We finance, that one is only a few of many projects. We also we have already financed more than 5,000 projects. That one is only 8 projects that I can show you. In the transportations, we also finance for LRT in Sumatra Islands. Also, we contract for construct here finance for port in Tomia. Also, we built for bridge, as well as we built for building school building in many universities, especially in Islamic universities. Also, we support for toll road, and then we also support for railways, as well as facility for environmental biodiversity in many areas. And also we support for huts dormitory in many areas. In this picture, we show in South Sulawesi, but actually we already funded many huts dormitory in Indonesia. I think I will end my presentation here. We'll continue by Pak Arif, my colleague from BI. Thank you, brother. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Over to you, Aban Arif.
Thank you, brother Dr. Ahmad Rufai. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Very good afternoon to all of you, and warm regards from Jakarta, Indonesia. Thank you, Dr. Ahmad Rufai, Head of Compliance IIFM, and also Mr. Ijlal Ahmed Alvi, CEO for IIFM, and distinguished speakers and all conference participants. First of all, I would like to congratulate to IIFM for publishing the annual Sukuk reports, the 12th publication, and it is great pleasure for me to speak in the webinar alongside with the all expert in the area of Islamic financial market. Distinguished speakers and conference participants, as a central bank, I just continue what Ibu Dwi already mentioned on the fiscal side. On the monetary side, please we share with you all our initiative in developing a Sukuk market, especially in the area of monetary policy. Please go to the slide 2 of my presentation. Slide number 2, please. Yes. As a central bank, Bank Indonesia is managing national reserves, and then it is to fulfill at least 3 objectives. First, liquidity management in order to fulfill international obligation of Bank Indonesia and the government. And secondly, we also maintain the value of foreign exchange reserve to gain the market confidence. And also third is used in monetary operation in order to manage the liquidity in the market, and as well as to stabilize the exchange rate. In order to managing the liquidity, we try to optimize the returns by investing in several instruments. Of course, one of them is in instrument in Sukuk. And in summary, in terms of Sukuk portfolio, it can be used for several things, such as managing foreign exchange reserve, support the Sharia-based monetary operation, and also reflecting that there is an integrated fiscal and monetary policies, because we use government Sukuk or Sukuk Negara as an underlying for issuing a Sukuk of Bank Indonesia as a monetary instrument. In order to keep the soundness of investment portfolio in the Sukuk instrument, we are mandated to conduct a thorough assessment which cover economic and market fundamentals, peer group benchmarking, and also the ability of Sukuk to support and maintain a sustainable growth. And as well, we are aware that nowadays, Sukuk could be used as investment trends. A longer term Sukuk could be retrenched into the shorter tenor in order to fulfill with the market needs in maintaining their liquidity. So global Sukuk has also become one of our priority instrument in terms of managing foreign exchange reserve. However, like any financial market, Sukuk faces its fair share of challenges. Yeah. Challenges first, lack of supply of Sukuk, as already mentioned also by Ibu Dwi, despite the growing demand for Sharia compliant investment, there is often not enough issuance of Sukuk to meet with the demand. And this shortage can increase competition among investors and driving up prices and also reduce the yield. Next is the competitive yield. As Sukuk gain popularity, the competition for this instrument has intensified and investors are constantly seeking competitive yields, and this can put pressures on issuers to structure a Sukuk offering that meet this expectation, and striking the right balance between the risk and return become crucial in this context. Another one is the market volatility. Yeah? Like any financial market, Sukuk is not immune to the market volatility. So the last one is the benchmark for pricing. Establishing a reliable benchmark for pricing Sukuk can be challenging. Unlike conventional bonds, Sukuk are based on underlying asset or services, and finding a universal accepted pricing benchmark can be very complex. But despite those external challenges, there are also internal challenges which are limited eligible Sukuk issuer with high quality requirement, and also how to achieve net asset value, nominal income, and excess return target. So providing the US dollar denominated Sukuk as underlying instrument is also become a challenge. This requires careful structuring and management to ensure that compliance with a Sharia principle. So this is something that we always facing in doing, as a monetary instrument. Now we go to the slide number 3 as part of our manifested strategy to support the development of Sukuk, especially in Indonesia, in line with our roles as a central bank. We consistently utilize the Sukuk as monetary instrument, and Sukuk can be used for open market operation and standing facility. You can see on the slide that our instrument can cover both the absorption and also injection monetary policy. So in practice, Bank Indonesia issuing Sukuk Bank Indonesia, where a longer-term Sukuk as underlying has retrenched into the short-term tenor in order to fulfill market needs in maintaining their liquidity. By BI regulation, Sukuk Bank Indonesia available from 1 week up to 12 months period. And however, so far under our liquidity assessment, BI provide Sukuk action for 7 days, 14 days, 1 month, and 3 months. Over time, we see that the use of Sukuk instrument by Bank Indonesia monetary operation continue to evolve and respond the growing demand from Sharia financial market participant in Indonesia. So let me go to the slide number 4, and Bank Indonesia issuance Sukuk has potential to strengthening the deepen the Islamic money market significantly, and can be achieved by addressing liquidity issues, enhancing market functionality, and encouraging greater participation, resulting in a more robust and dynamic Islamic financial instrument. Slide number 4, please. The issuance of SUKBI could becoming the Sharia compliant Islamic monetary instrument, which could make a connection with the real sector altogether. And all in all, since its first issuance in 2018, we have experiencing that Sukuk Bank Indonesia have over both safety and flexibility. Sukuk Bank Indonesia provide a secure investment option for Islamic bank in Indonesia, and at the same time enable Bank Indonesia to provide retrenched manageable Sharia comply instrument which meet market demand in terms of managing their liquidity. The flexibility is vital for maintaining financial stability and ensuring well functioning of the market. So let me once again in the slide 5, I think the last one, once again, let me emphasize that the multi-significance function of government sukuk, not only its potential to be harnessed as source of financing and pivotal fiscal instrument, but also Sharia monetary policy and Sharia money market instrument. And yet, as we reflect upon the immense potential of this instrument, and then we still believe that there is a lot of work to do, to our homework, to improve day by day to get more better landscape of our Sharia economy. May Allah Almighty bestow us the strength and patience to preserve in fulfilling our duty for a better future. Akhirul kalam. Assalamualaikum warahmatullahi wabarakatuh. Thank you very much.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Ka Dwi Rianti and Abang, Brother Arif, mashallah. Terima kasih banyak for the excellent informative presentations on the growth of sukuk in Indonesia. If you allow me, I can say that, of course, no doubt the potential for Indonesia's growth, both domestic and international, is something huge. I think nobody, can dispute this. Considering Indonesia has the largest, Muslim population of over 200 million, if I'm not mistaken, in the world. And in addition to the ambitious infrastructure plan the government of Indonesia has in place for the country, I think these are the main things that really the potential is huge for the sukuk market growth in Indonesia. So thank you both for this much needed information about the growth of and development of the sukuk market in Indonesia. So inshallah, next year we will hear more good news and more development in the Indonesian market, inshallah. So terima kasih banyak. Jumpa lagi inshallah.
Terima kasih.
Thank you, Dr. Ahmed, Ijlal, thank you.
Barakallahu fiikum. So final session, dear brothers and sisters, for today is a very interesting one, to be moderated by our high regarded brother Mustafa. Brother Mustafa is an expert, of course, in the field of the field of Islamic banking. I can say he's kind of authority in it. All right. So I will hand over to Brother Mustafa to mention the name of the panelist, and over to you, brother.
Thank you so much, Dr. Ahmed, for your very, very kind words. Bismillah ar-Rahman ar-Rahim. Alhamdulillahi Rabbil Alameen. Wa salatu wa salam ala Sayyidina wa Nabiyyina Muhammad wa ala ali wa sahbihi ajma'in. Distinguished guests, I'm very, very delighted to be part of the panel today. And I would like to start off, first of all, by congratulating IIFM and its partners on the launch of the 13th Global Sukuk Report, a report that has become a benchmark and a pillar for the industry of Islamic finance, serving as a very, very significant reference point and helping to drive many of the advancements and achievements that we have achieved in this space in the last few years. My session today is going to focus on sustainable development goals and the evolving sukuk landscape. And it is a very, very important session, and I'm very pleased that the IIFM team has taken time out to assemble an extremely distinguished group of panelists who will be speaking on this matter from many, many different points of view. We have representatives from multilateral institutions, from Islamic banks, from various consulting entities, from various other industry stakeholders that provide key pillars and drivers for the growth of Islamic finance. And it'll be very, very interesting to see their perspectives on what is becoming one of the most significant topics within the broader financial services space and Islamic finance in particular. Before I introduce the panelists, I want to lay some context, and I think it's very, very important for us to understand how significant, sustainable finance and the sustainability agenda is globally, right? The Sustainable Development Goals are the global focus point when it comes to economic policy development, whether at an international, regional, or national level. They are drivers of many economic policies and many activities that different governments and other institutions drive that are not looking to simply achieve economic outcome, but broader sustainable development. Within that, when we look at, the climate agenda and we look at the activities around environmental sustainability, that has become one of the most significant and most hotly discussed topics in the industry today, right? For the first time, we have seen global action and commitment. We have 194 countries around the world that have disclosed their nationally determined contributions and created a mechanism where it can be tracked and monitored and there can be accountability around that. We've never seen that with any other global challenge on this scale. In addition to that, experts estimate that we will require between $4 to $5 trillion in the next few years per year to be able to meet our global commitments, right? That is about 5% of global GDP. And we don't have an extra $4 to $5 trillion lying around. It will be existing financial activity that will need to be targeted and diverted towards sustainability and ESG items. Within the developing world, the estimate is around $1 trillion. And so far, only about 100 billion has been pledged. So there's a massive funding gap in that space, which is why we see so much significance in our region in the developing world around the sustainability and ESG agenda, that as demonstrated by the hosting of COP last year in Egypt and the hosting of COP this year in the UAE, because increasingly these governments are putting the sustainability and ESG agenda at the forefront of their policy. And within our markets, we know that Islamic finance plays a very, very significant role. It is a major contributor. It is one of the fastest growing segments within many of our markets. It is a vibrant system that brings new institutions and new entities and new individuals into the financial system and helps to diversify and create economic value out of that. But how does Islamic finance fit into the broader discussion around sustainable finance? To understand that, we will turn to our panelists today who will share their insights and their expertise on where Islamic finance fits in, and particularly where do Islamic capital markets and instruments like Sukuk fit in to this discussion. And before we begin, I would like to just take an opportunity to introduce our distinguished panelists. We have Mr. David Testa, who is the Executive Director at DDCAP based in London. We have Mr. Ahmed John, the General Manager for Treasury at the International Islamic Trade Finance Corporation, ITFC, part of the IDB Group. We have Lilian Lefalher, Executive Manager and Head of Treasury and Capital Markets at Kuwait Finance House in Bahrain. We have Ms. Luma Saqaf, who is the Chief Executive Officer of at Ijlal Sustainability Consulting based in Dubai. And we have Dr. Hatem Al-Tahir, Director and Consulting and Financial Services Industry within Deloitte and Touche. Ladies and gentlemen, thank you very much for being with us today. And without further ado, I think we will get started. And to start with, I think, Ahmed, you're coming into the panel from the point of view of having a multilateral perspective across markets, across different areas. From your perspective, where do you think Islamic finance fits into this broader sustainable finance discussion that we're having globally today?
Hey, good afternoon, everyone, and thank you, Mustafa, and big thanks to IIFM for the kind invitation to be in this panel. In my introduction, I would like to paint the overall context that can help as a backdrop for our discussion today. Since the introduction of the SDG and the ESG and the adoption of these two mandates at the international, regional, or national level, the significance of these two concepts of the SDG and ESG have never been tested in reality and in practice as we have been experiencing since 2020. As we all know, in 2020, the whole world was struck by the COVID-19 pandemic, which really stress tested all economies' resilience and soundness. Unfortunately, a lot of affected, or you can see the highest impact of the COVID on the least developed countries and emerging economies, among them a large number of member countries that IDB, ISDB, and ITFC as a multilaterals serve. With a lot of countries since then are still recovering from the impact with a varying speed, of course, of the pandemic. Suddenly, the whole world also again was struck by a major conflict that happened back in February last year between the two largest, unfortunately, the two largest sellers or exporters of grains, and food commodities. This conflict has caused a significant disruption in the supply of basic and strategic commodities, especially wheat, and of course the energy supply, causing soaring prices of these commodities in the market. Which add more stress on the economies of member countries. Unfortunately, another fact that many of member countries, we can see them in the list of highest debt to GDP countries with the highest default risk probability. These countries are in fact among the largest importers of food and energy products, and now demanding from multilaterals like ISDB and the ITFC larger financing amounts to fund the higher and more expensive import bills of these strategic commodities. What also further complicates maybe the overall context is the aggressive tightening cycle that both the Federal Reserve in US and ECB, European Central Bank, have been adopting since Q1 last year, with the continuous and aggressive interest rate hikes. Now we are speaking of almost 500 basis points in the interest rate of the US dollar, and 400 basis points in the Eurozone. Now financial markets and institutions are forced now to pass over these additional costs to the countries, considering that now the risk profile of these countries has been also deteriorating over the last 2 years. This already stretched further the fiscal burdens that member countries and a lot of countries around the world are facing, with higher cost of borrowing to fund the balance of payment deficits, to finance the import of essential commodity needs that related to the agricultural sector, as well as food security for these countries. Now under the new realities and the stress conditions, if we can call it this way, sustaining the capacity of these countries to continue work on their SDG goals and targets, and ESG goals and targets become more prominent and vital, and the role of the multilaterals like ISDB and ITFC now become more needed and vital to help these countries in this journey. I thank my colleague Zaki, who already gave a very good idea and an overview on the issuance of ISDB thematic Sukuk, which eventually help a lot of countries in achieving their SDGs and ESG target. But I can also highlight the efforts that at the level of ITFC we are doing in the last for the last so many years in helping the countries in achieving their ESG and SDG targets. And hopefully I can link that with the topic of Sukuk and carbon credits as the key agenda items for our discussion today. Thank you.
Thank you very much, Ahmed, for that. And I think, as you said, you've really laid the context, and painted the picture very vividly of many of the challenges that exist in member countries. Lillian, if I can bring you into this, I mean, Ahmed just highlighted the multiple challenges that, different markets face, particularly developing markets, whether it's, food security, supply chain issues, high debt, sustainably driving its growth going forward. What role does Islamic finance and Islamic financial institutions play in that conversation?
Bismillah ar-Rahman ar-Rahim. Thank you, Mustafa, for giving me the chance to participate to this panel. I'm not going to repeat what Ahmed said brightly and very concisely. I mean, at the end of the day, what we do as institutions, I would lie to you if we were saying that our first goal is to be sustainable. Definitely, we are driven, and we have to say it the way it is. I mean, we are driven and by some of even if we are Islamic, we are still driven by financial goals and profitability. Having said that, definitely the trend and the trend of ESG and SDG context is just pushing all of us to act. KFH Group, as many of our competitors, we have set up an SDG and ESG and sustainability report for the last now 3-4 years, just pre-COVID. I know that some of the large financial institutions, Islamic financial institutions, put this also in place. But clearly, in our corporate culture, I would say this SDG concept and ESG concept are not new. They seem to be relatively new. When I say new, it's maybe 5 to 10 years, but they are embedded in our, I would say, in our constitution, in the way we have been set up from day one. We've always highlighted in all our and coming from the conventional banks and from the Western bank, I've seen the difference of culture between an Islamic bank and conventional bank was really, quite amazing. Where we definitely look at sustainability, but beyond sustainability, especially social aspect of the ESG, especially the S, if I may say, of the ESG has been always at the forefront of all Islamic institutions, I'm sure, because it's in our DNA, I would say, in the Maqasid al-Sharia of all Islamic banks. We all look at this social impact that we have. And Islamic finance has always been, in theory, I'm not saying that we are all perfect and all in practice, whatever we do is with this in mind, but definitely it's something we have in mind. And within our organization, the fact that we have Sharia advisors and Sharia board definitely remind all of us when we are a bit too oriented toward profitability, that what is our ultimate purpose, which is to help the community and our customers and the community at large. So that's why I always, quite often when I have, and I recall that we had this discussion, Mustafa, together and another panel, is that each time you speak with some Sharia scholars, they're always a bit puzzled by this ESG and SDG and all this. And sometimes, some of them are even saying, you know what, these are Western concepts which are embedded in our culture and what we are doing. So they're not going, in a way they are saying, I put words in their mouth, but they are saying in a way that they're trying to teach us something that is already part of our culture and part of our DNA. So again, I do believe that there's much more to do. I'm not sure if we're going to speak about where we stand today, but if you look at the SDG goals, and we are more or less halfway from the 2015 when they were set towards the target, which was 2030. So we are exactly halfway. This month they're going to meet and discuss. And when you read where we stand, and when you look at the statistics of this 169 targets among the 17 goals, it's quite alarming to see that we are. It's very difficult to be optimistic and to be happy with what's going on now. You see that half of the 169 targets are not met, and we are off track, and that you have another third where we are actually seeing a worse situation that when the target was set back in 2015, and there's only 15% of the targets which are more or less met and are not necessarily the most, I would say it, the most important. I'm not saying they're not important, but most important in terms of impact on the environment, especially. So I'm sure we'll come back to this, but again, the main takeaway from my introduction is that it's not something new. We have to formalize it because at the end of the day, Islamic finance is a very small part of global finance. And as you said, it's a big agenda item now, this SDG and ESG concept. So we are adapting and we are following the trend of the whole finance. But again, there were things that were not stranger to the Islamic finance.
No, thank you very much, Lillian, for that. And definitely we will come back to many of the points that you've raised, including the challenges that we face in terms of implementing why we're not able to achieve it, and also to share with the audience some examples of products that are actually achieving what we want to achieve in that. So I will definitely come back to it on this. Dr. Hatem, I think if I can bring you into the conversation now, you also have a perspective of looking at Islamic finance across markets, and you have looked at many case studies of different institutions that are embedding ESG when it comes to, or sustainability when it comes to their strategies. So can you give your perspective from what you've seen from the clients you've interacted with in the markets that you've looked at? Where does Islamic finance fit into this broader sustainable finance or the broader sustainability discussion?
Sure. Thank you so much, Mustafa. Assalamu alaikum, everybody. My congratulations to Brother Ijlal, obviously, and all the leaders at the IIFM for the such a wonderful, insightful new edition of the Sukuk report. The talk about the ESG, obviously, and the SDGs is a very interesting topic. And I think we see a lot of organizations, including banks, that they are using the non-financial analysis of, the likes of ESG and sustainable development goals to assess their financial risk and opportunities in the market. As well as Lillian mentioned, that sustainability has become now embedded in all kind of strategies and sustainable reports. We've seen banks like Al-Barakah Bank and CIMB, DIB, very aggressively moving in terms of developing strategies. They have developed clear guidelines and KPIs for addressing development of products and services that's aligned with SDGs. And we can share some of the case studies that I plan to share with you today. But generally, what organizations should do, I guess, is more of creating awareness to different stakeholders, support from boards, CEO level and executive management, to ensure that ESG initiatives and other SDGs initiatives are completely understood with clear KPIs and clear objectives to the local markets and local needs of the both retail, corporates, and different products and services are designed. Also, better understand the opportunities out there in the market for banks and Islamic banks in particular to develop these SDGs and goals. And in fact, we have made an analysis between the 5 Maqasid Sharia and the 17 SDGs, and of course, interestingly, these are all incorporated in the 5 clear objectives: developing the social infrastructures, whether it is housing, healthcare, the very important social kind of education, housing sectors that I think that Islamic banks are overlooking for years. It's good to see that products and services are developed along these lines. One other point to mention about ESG for organizations is to ensure that, that there are some kind of support from the industry standards setting bodies, the likes of the IIFM, the IFSP, the UAFI, to give more guidelines and guidance as how these sustainable reports can be uniform and developed so that benchmarking can be done, especially when it comes to the proceeds of these products, whether it is Sukuk or any other investment products. I'm happy to share more on this as we go along, and I probably give some time for other colleagues to share their inputs. Thank you.
No, thank you very much, Dr. Hatem, for that. And definitely you touched upon two very interesting points on the awareness front. Definitely that's something that I think we will have more of a conversation with the panelists on that. And on the standard setting, or the role of standard setting bodies, the need for standards, the need to help it facilitate and what the impact of that would be is something that, you know, we will come to discuss later in the panel. I want to bring in Luma now to the conversation. And Luma, you have a very, very interesting perspective on this, because you know you have overview both from the regulatory and policy making side. You have certain overview on the corporate side on what corporates are facing, and you have the perspective on financial services. So you know, from those different angles, where do you see you know, Islamic finance and you know, financial services playing a role in helping the broader ecosystem achieve some of the you know, macro targets that have been set out?
Well, first of all, thank you very much for hosting me today and allowing me to give my point of view. Your question is quite broad, obviously, but it is very, very important to answer, you know, to set the scene in a way for what is happening. So if we just step back for a bit, and I know that, you know, we've already heard about what has been going on in terms of what COP means for us and where we are with transition generally. The biggest challenge globally, I guess, is financing. You know, that is number one. Now, of course, maybe I also can talk specifically about the MENA region, because it's kind of reflective of what the world is facing. So MENA obviously needs a lot of financing, huge numbers. The UAE alone, which supposedly, you know, has funds, it still requires something like $600 billion to achieve its goals. But on the other hand, you have Egypt requiring, I think, $260 billion to achieve reduction only in 3 sectors, and not even 100%. So that is significant. Now, the financing is to finance what? When we look at what is it that we're financing, we're looking at obviously climate transition and mitigation. But the MENA region, again, like other regions, has a lot of significant adaptation issues, water scarcity, droughts, and we are one of the most exposed regions for on climate for heat, right? So all of the ensuing things. How does that all fit into today's discussion and Islamic finance? 2 things that need to happen, I guess. The first level is governance, and this is where regulation is important. And we probably need to talk a little bit more about what governments should do. And probably the EU is a very good example of governments that have acted and have already taken big steps, if you like, in moving into how to reorient capital towards more sustainable finance. And that is an experience that we should learn from. And learn from the mistakes. We're already seeing some mistakes in terms of, you know, putting taxonomy in place, requiring disclosure. And I would love at some point to talk about why disclosure and strategy are very important for corporates specifically. But taking that, so our needs and the type of projects we need, mitigation, adaptation. Where does Islamic finance come into all of this? I mean, it almost immediately jumps at you that this should be something that works. First of all, when we talk specifically about the MENA region, Islamic finance is obviously one of Islamic finance homes is MENA, right? Second home being Asia. So it's already there. But what has changed? And I come from you probably know, you know, the legal practice in Islamic finance. And when we were doing transactions, this is 2006, at the zenith of Islamic finance, the key issue there was we never discussed whether it was ethical or not, what we were discussing or trying to compete on as Islamic financing was more on whether we're able to provide the same type of service, the same type of financing as conventional. Now, we have that narrative has completely changed, and ethical finance has become the center of the room. And so Islamic finance or Islamic institutions have a great role to start the conversation, actually to lead the conversation, because what they're doing is far more consistent. I heard Lillian talk about that, you know, as a bank, they're looking for profit. I think that is key to understand that that must be first, because otherwise you cannot be sustainable from a financial point of view. You won't last. But what we're trying to do in Islamic finance is to last. So we need financing, but also to continue being consistent with our values. The other thing that is important, I think, to happen on the Islamic finance front is to understand that maybe it's time to look at Islamic finance from a much bigger angle. What do I mean by that? Islamic finance, as we see, one is the maqasid point where it affects everything, and we can talk more about how it affects the types of projects that we can pursue. But also, it means that every party, every part of the society has a role to play, and they are different roles. What banks can do has to be, as we said, profitable at the end of the day, plus Sharia compliant. But we have governments that have to play. Look at, and this is an old sukuk, the Ihsan sukuk that Malaysia did a few years back. It is around impact, and it's around getting benefits, if you like, directly into education. Of course, we have to emulate it into things that what we're talking about today around climate, but still, it's a good example. But that's the government taking that role. What individuals can do, what banks can do, but also each bank has a different role. Retail banks have completely different role from corporate and so on. So we have to look at, we have to expand the lens, we have to expand the roles of people, but from opportunity perspective, this could not be a better time for you to be able to declare that you are following Islamic Sharia as your as the principle for your approach to financing.
No, thank you very much, Luma, for that overview and perspective. And I think a number of points I've taken here that we will be discussing going forward on that, particularly the point around governance, which is something that has come back. Your point around impact and it being the right time to declare fits in quite well with, I think some of the sentiments that Lillian made around how important it is within our DNA as Islamic finance, and also what Dr. Hatim said around the awareness being key driver for it to be implemented amongst key stakeholders. David, I want to bring you into the conversation. And, again, your perspective is very, very interesting in this, right? Because your institution is a key facilitator for Islamic transactions. A lot of sustainability, initiatives have been led by DDCAP to make sure that they are in line with what is expected as a sustainable partner. And I'm sure you've had to have that conversation with many of your partners as well downstream. So how do you see sustainability becoming more and more significant when you're operating in the Islamic finance space? And where do we go from here?
Well, thank you. And again, thanks to Ijlal and the IIFM team for this opportunity for us to join this panel. It's a real opportunity, and this is obviously one of the most important topics in front of us all. A couple of points, and I don't want to go back too much in ancient history, but back in the good old days, one thing I would say about Lillian's comment, when I left conventional banking back in 2007 and joined to become the first CEO of Gatehouse Bank, that was the first time that I could actually have a serious conversation about financing sustainable products. So I think that's quite a positive thing. And in fact, we launched a fund in the teeth of the global financial crisis, but didn't do so well, but I suspect it would do very well today. And I think that's a positive. I think things have changed. I think the sweet spot has arrived. And I think there is this natural overlap between the principles of Islamic finance and the sustainability agenda. I think the Global Ethical Finance Initiative a few years ago did a cross-religious survey in the UK with the leading imams, the Church of Scotland and the leading rabbis in the UK, and they identify sustainability as perhaps the core principle that unites all those Abrahamic religions. So that's, you know, as a non-Muslim, obviously living in a Western country, I took a great deal of comfort from that, and I think reinforced the sort of intellectual aspects of what the Islamic can do in this space. We are involved in a lot of deals, and obviously we are also involved, I think, in that recently announced green Sukuk that is being financed partly with Murabaha. And so as part of that exercise, as a small, medium-sized company, we only have 30 people, but with obviously a very broad global reach. You know, we've engaged with the London Metal Exchange and the London Platinum and Palladium metals authorities to really identify what they're doing in the green space. And I think people might be aware that, in particular, the LME has led the charge on its passport scheme, which is encouraging its refiners and its producers to adopt sustainability approaches. And I think that is a bit of background noise, which I think is a positive aspect here. I think on the regulatory side, you know, we're not regulated, but we have taken steps, again, as a small and medium-sized company, to not put in the sort of full-blown sustainability framework that obviously the likes of KFH and other major companies can do. But we have, for example, now got a sustainability champion on our Sharia supervisory board. Dr. Akram Laldin from Malaysia is doing that. So the small steps that we can do as a smaller institution, I think we're very keen, and my managing director, Stella Cox, as you know, is a real thought leader in this space and has been a very strong champion of these principles in recent years. So that's all encouraging. What we're also seeing, and I think the one announcement perhaps that I, again, sort of latched onto as being something which I hope is going to be a help going forward, is the launch of the International Sustainability Standards Board, something that was announced in COP26 and has come under the wing of the IFRS. And they made a big launch in June this year about their first two standards about disclosure requirements for corporates and financial institutions. Obviously a transition period before it's fully implemented, but I hope that the approach they're taking in terms of the transparency of disclosure can be widely adopted. And I was quite encouraged again by the fact that people like IOSCO and the Financial Stability Board and other regional players have come out strongly in support of that initiative. And that's maybe something which could help everybody, I think, try to simplify things. I mean, I think Islamic finance is always a victim of, and it's been said earlier in the sessions today, try to simplify things. And we can only hope that the initiatives like the ISSB will help simplify, but also get to an issue, I think, which again, I think you want to touch on a bit later, which is greenwashing, which is, of course, one of the risks of this space. And transparency in disclosure of risks and what people are doing is, of course, the strongest antidote to that.
No, thank you very much, David. It's very interesting to note the work that institutions like yourselves are doing, what larger institutions like LME and others are doing on that, and particularly the point about the standards, ISSB standards that have been launched. I think we're going to do more of a deep dive if time allows on that, particularly because I think that's a very, very significant development that can impact many financial institutions and corporates on that front. But I want to take the conversation maybe back to the point of the Sukuk space, and maybe Ahmed, if I can, turn to you. What have been some of the challenges that you feel in the Sukuk space when it comes to, embracing, sustainability and so on? We know that green Sukuk and sustainable Sukuk have grown tremendously, but they still make a very, very small segment of the overall, outstanding Sukuk issuances that are out there. So what are some of the challenges? What are some of the hurdles? And what should we be thinking of when we think of implementing ESG considerations within the Sukuk space?
Okay, thank you, Mustafa. Of course, I will not repeat what Zaki has mentioned in his, of course, ISDB has been doing great efforts when it comes to issuing Sukuk that will serve eventually the ESG and SDG achievements. Let me also, maybe coming from the perspective of ITFC, we, over so many years of experience, we have found that the trade, if I can speak from the trade finance angle, we have found that the trade is indeed a key pillar for the economic development and prosperity of countries, to allow them to achieve competitive advantage, creating employments, and improving the overall social well-being of the societies, which we can see. We can see now the link, or we can touch the links with these objectives or goals with the different SDGs and ESGs, if we can dig deep into that. Since driven by this mandate, of course, ITFC has been delivering for the last 15 years its strategies and plans to help member countries achieve, based on each country's goals, targets, and mandates related to SDG and ESG. We want to provide, or we have been providing, customized trade finance and development solutions to enable each country where do they see the gaps in their progresses to achieve specific and relevant or more critical SDG. Of course, the SDGs targets from one country to another varies because of the geographies and economic magnitude of economic development. We found that already what we have been doing already is serving 9 of the 17 SDGs, and mainly the social pillar or element of the ESG. How do we do that? Of course, we are been providing a lot of financing to the agricultural sector, the food security targets for these countries. So far, since we incepted ourselves back in 2008, $10.8 billion has been extended by ITFC and its partners to serve the agricultural sector as well as the food sector. So if we examine deeply these two elements, we can see that we are already serving the no poverty goal of the SDG, the zero hunger goal of the SDG, as well as the social pillar of the ESG. And here I have to thank all of ITFC partners who believe in the mandate of ITFC and joined our syndicated loans and transactions that we have been providing, which, as we can see, may serve also the partnership for goals under the SDG. If we examine deep, Mustafa, in our portfolio, we can see that the agricultural financing, the food security financing has been growing proportionally in the overall portfolio of financing of ITFC, which maybe now led us to think deeply and triggered our thinking process. Shall ITFC go now and consider fronting the capital markets to issue a sustainability sukuk or a social sukuk? Of course, the idea is still under deep thinking and analysis, and I hope the market dynamics in the coming near future, as well as the global economic conditions, will be conducive enough for ITFC to materialize this goal in the near future. Thank you.
No, thank you very much, Ahmed. And you know, it's fantastic work that ITFC is doing on the front of agriculture and food security. Something in particular you said, you know, customized solutions for each market. I think that is something that is critical and something that, you know, sometimes gets overlooked when we feel that, you know, one solution can be applied across, you know, all markets, and that's never going to be the case, right? Customized solutions that meet the specific needs and specific objectives of different markets, I think, is going to be a key driver of that. And, you know, we hope to see ITFC in the Islamic capital market space, you know, hopefully raising funds and doing more of the good funds and mobilizing funds towards some of these activities. Lillian, I want to bring you into the discussion and a similar question. You know, obviously, you know, you're very active in capital markets and very familiar. When you look at, you know, what are the challenges when it comes to sustainability sukuk, green sukuk, or other SDG linked sukuks? What are some of the considerations that market players look at, and what are some of the challenges that they face?
Thank you, Mustafa, for the question. I mean, on the ESG space and on the green sukuk, to make it short, you have two ways of looking at things. The first is as you said, is that it's you see an exponential growth and you have 30-40% year-on-year growth. We saw in 2021 there was like $3-4 billion of green sukuk, then it went to $6 billion in 2022. In 2021, so in 2022 another 30-40% to $8 billion. So numbers seems to be big, but again, that's really a drop in the ocean. If you look at what's going on in the conventional world, it's nothing to compare. Actually, I was reading a Bloomberg report to prepare this session that roughly we're gonna be around 1/3 of the asset under management will be ESG stamped, if you like, when it comes to the conventional space. We are, in comparison, when it comes to sukuk, which is the main capital markets, Islamic capital market instrument, for sukuk, we are around 3-5% of the outstanding sukuk being green sukuk or ESG sukuk. KFH Group, we have been one of the pioneer. Back in 2021, one of our subsidiary, Kuwait Turk, issued a tier 2 green sukuk, which was 10-year callable after 5 years. And you see more and more of this financial institution coming along. I think it's going just in trend with what we are doing in our financing book, basically. So the more we are going towards ESG targets in terms of overall financing, and we see it in the UAE and in Bahrain and elsewhere, where the regulators are putting more and more pressure on all financial institutions to report ESG goals and to try to harmonize the way we are reporting our ESG progress. So then eventually institutions will come and issue regularly green sukuk. We saw Dubai Islamic Bank coming with a $1 billion earlier this year. As we talk, actually, we have a large corporate in the UAE, DP World, issuing a sukuk. But again, one thing which was quickly said by David, and it's a bit taboo in this part of the world, is the greenwashing element, especially being sitting in the MENA, sitting on the largest oil and gas reserve in the world. It's always a paradox for all of us around the table and in this part of the world to speak about sustainability, impact on the environment, when you have back in Europe, in the US, and especially in Europe more than in the US, to be honest, but in Europe, people talking about stopping completely financing of fossil energies. I recall one quite of shocking image back home in France, where there was some activists stopping employees of Société Générale to enter because Société Générale was perceived as financing oil companies. So in our case here in this part of the world, it's very difficult, and all the discussion around the COP28 being held in Dubai is around all this, is that there's this paradox of Islamic finance being developed on the core of on the base of the oil money, if you like, and mainly in the GCC, but also in Malaysia. And at the same time, we need to cope with ESG goals. So it's always difficult, and we need to be always extra careful, probably in this part of the world, of being accused of greenwashing. And that's really something we try to be careful with our customer. We had a case of an oil company where we financed a large syndication, and there was some ESG goal, and including environmental goal for oil company that will be perceived back in Europe as something which is antinomic in a way. So it's always very, very difficult. But the fact of the fact is that definitely there is a growth of green sukuk coming up. As I said, it's going in parallel, because most of the issuers in sukuk in general, and specifically in the green sukuk, will be financial institutions and government. You see these two, corporate are very few, and when you see them coming up, it's going along with their own agenda of financing, because by definition, whenever you do a green sukuk, you have to back this money or use this money to fund ESG initiatives. So the more we will do at our balance sheet level, the more you will see financial institution issuing sukuk. But one of the main challenge why maybe this the ESG element in this part of the world is relatively small is the shortage of domestic and regional ESG-focused investors and asset managers. We don't see many in this part of the world. There are few, but much less in number than what you see as asset manager, ESG-focused asset manager back in Europe or in the US.
No, thank you very much, Leon. I think you touched upon some very, very good points, and a number of them we'll come back to. When you talk about this growth of Sukuk being in line with the growth of the overall financing book, really when we talk about Islamic finance, banking is the main driver of the industry, and that's something that I will come back to discuss to see what we're doing on that front. The point about greenwashing and the tightrope essentially that we walk in this region, being economies that are driven by oil and gas in a major way, and then talking about sustainability is there. And one particular point that we will discuss is what role carbon credit markets play in that, and how they can potentially help to address some of these considerations. So a number of points that we will come back to if time allows. Luma, I want to turn it to yourself. And basically, again, Lillian talked about, there is exponential growth in the Sukuk space, but, it's a drop in the ocean compared to what we need and compared to what the overall outstanding is, and, how conventional bonds are doing their thing. So where do you see the Sukuk market in terms of what we should be achieving, given the broader stated sustainability goals that we've all committed to?
Look, I think there is a disappointment, if you like, that there aren't enough ESG-linked Sukuk that have been issued. ESG Sukuk generally in our region, given what we have discussed about this being a natural space for it. Now, one, I think of the possible issues is when you want to issue a Sukuk is it's like a bond in our market now, more or less. But do you go the next level for it to become ESG or not? As with everything we have discussed, it should be natural that it should also be an ESG Sukuk. But in reality, I think two things are missing. The first thing is that we have not seen enough. COP28 has helped us see the benefits, etc., and has brought home to MENA this importance and starting to focus on ESG. So we're talking about only a couple of years, really. The disclosures have only started a couple of years back. And that brings me to that big point of why are disclosures important? Disclosures are important not just because they are disclosures. I mean, what is it that you're disclosing? You're disclosing what am I, me, company, doing vis-a-vis all of these climate and ESG-related risks. So if I'm doing that, then as a company, I am properly risk managing my company, and therefore as board, I should be good because I am doing what I'm doing. But also I am telling the investors, I'm a resilient company as far as climate is concerned, so come and invest in me. But I'm also telling the banks that I am resilient, I'm going to be able to pay my debts. More importantly, here are my plans, my projects for how I'm going to grow and the kind of money I need, the kind of projects I will need your financing for. So in reality, for me, disclosure and strategy, they are the ones that create the sustainable assets that can be financed when we talk about we need all this financing. And so because we still don't have that, it is not very clear on what this additional layer of ESG is going to achieve. That's one. And maybe the other point is kind of related. We're not seeing any greenium. The whole point initially of creating this spectrum of green is greenium, is that hopefully those who cannot access the market normally, if they show that they are green, they are sustainable, etc., they can get a better interest rate. We're not seeing that, not in Europe, not nowhere. And that is not encouraging people or companies to look at, is it really necessary to go that extra mile, put a strategy, etc.? And then we have the big topic of green, and I think we must go there at some point, is greenwashing. And there is, I don't know, I mean, greenwashing has become such an issue that we now have another problem, which is greenwashing. Greenwashing is the exact opposite, is companies trying to actually say a lot less about what they're doing in the ESG world for fear that they would be accused of greenwashing, there would be some controversy around them. You have all these now anti-ESG movement in some countries. So will those investors look at me? So we're starting to have already problems, even though we haven't even started on the path yet. So those are, I guess, are some of the issues that we are facing in order to create more ESG assets.
No, I think there's some very good points, and I completely agree with you. Disclosures are going to be critical for the industry to actually grow to where we expect it to be, because without appropriate disclosures, you have no comparability. Without comparability, you have no accountability, right? Anybody is free to just claim whatever they want, and there's no ability to as you said, reward those who are actually green and to hold to account those that are not achieving what they should be. And I think that leads us very nicely into the whole conversation around standards and regulations. And David, maybe if I can bring you into the conversation, we've talked about the importance of disclosures. We've talked about the need for standards, the need to challenge greenwashing and things like that. When you look at the existing landscape of standards that are there, how effective do you think they are, and what do you expect new standards like the ISSB standards that have come out to do for the sustainable finance industry, and particularly in the Islamic finance markets?
I think we've discussed a lot of challenges, and I think we can be under no illusion about those. And I think let's take the example of the US, which is now a completely bifurcated system with half the states supporting ESG and half the people saying not. So it's a totally partisan environment. The ISSB thing caught my eye simply because it seems like a much needed unifying set of principles and rules and regulations, which look to me to be pretty simple to implement. They've got to be supported by local players as well as international bodies, of course. And the announcement came after a long period of consultation, and the CEO was quite interesting. One of his comments, he said there were a lot of challenges and there were obviously a lot of struggles even to get to the point of publication. So nobody can be under any illusions about that. But if it can be adopted and implemented, and I think the starting process is for financial reports next year, then the whole principle of the initiative is to make sure that corporates and financial institutions publish stuff at the same time as their general financial disclosures. And I think that sort of element of rigor is something which should be welcomed and should be helped see these things as being standardized and things which companies, especially bigger companies, can adopt. Now, I think, again, in an earlier session, the challenges of this whole issue for SMEs, which maybe not for big Sukuk issues, but I think it's also been touched on by people like Scott Levy. I mean, SMEs can issue Sukuk too on a smaller scale. There are initiatives going on as well, and I've noted that the Securities Commission in Malaysia has been through a consultation recently with a view to coming out with some, guidelines for SMEs in Malaysia and Southeast Asia. And those sort of initiatives, again, are to be welcomed. The big challenge, of course, is investor demand. I think Lillian has highlighted the challenges locally, but ESG is a broad canopy of categories. It's not all about, I suppose, hydrocarbons. There must be ways in which other things can be done. And one, again, in my research for coming on today, one issue which one of my colleagues pointed out to me was the recent issue by one of the African countries, a blue bond, conventional issue, which was guaranteed by the US government, effectively, one of the governmental agencies there. So it allowed them to issue for longer and cheaper than they would otherwise do, and it's all to do with maritime preservation and coastal preservation. Now, it's effectively political risk insurance. Now, that particular country has unfortunately had a coup since then, so I do not know the extent to which the risk insurance policy has been activated, but the principle seems to me, and I don't want to put Ahmed on the spot, but it seems to be something which perhaps the ISDBi or the ITFC, as a very highly rated institution in the Islamic world, could, and I'm sure they are, looking at to assist countries in the OIC to help them on the path to sustainability in a way that perhaps is maybe slightly thinking outside of the box.
No, that's a very interesting point on that. And I think, it is going to be these types of unique solutions, thinking outside the box, that is going to help us to achieve where we want to go on that. Dr. Hatem, if I can just bring you into the discussion. When you look at the growth of green sukuk space, sustainable sukuk space, many of the challenges were mentioned today, whether it's standards, whether it's awareness, whether there's greenwashing and many others. What do you see has been the role that sukuk has played in helping to support the drive for sustainability within Islamic finance, and what is lacking and what more should we be doing in this area?
Great question, Mustafa. I'll start with what should be the role of the sukuk. Obviously, we have always been aspiring a role in the Islamic finance to contribute to local community development, infrastructure projects, and have a real contribution and integration to the global financial markets. And I still see the sukuk market and Islamic finance broader market is still not actively, I would say, or effectively contributing to the local infrastructure projects. And we claim that we finance the real economy, develop local communities, make social impact and responsible financing. But we hardly see products and services that's really aligned with these goals and these objectives. I think the climate change financing gaps, and especially in our region, is an opportunity and creates significant financing opportunity for Islamic financial institutions and investment banks to take a role. Product development practitioners and obviously researchers also need to develop structures that have a good, attractive risk and return profile. We in a consulting firm like Deloitte, we have corporate financiers who finance renewable projects and infrastructure projects and never had the opportunity to know about sukuk, for instance, as an infrastructure asset class. I think there is, again, we emphasize on the role of education and awareness. I also, keep saying that standard setting bodies should take a lead in this, try to educate the market participants, whether it's investors or issuers, about the alternative financing tools that we have. Is largely considered as ethical finance. Islamic finance is always considered as ethical financing, responsible financing, and has good default, rates in a way. Very successful track record, especially the sukuk. Why not introduce these to corporate financial banks? And I speak many times to my colleagues who are engaging in financing, DEWA projects and other key renewable energy projects in the region. And they seem to be not interested because either the issuers are not interested or the banking institutions are not interested. So these are the kind of things that Islamic finance need to address and hopefully try to bridge the knowledge gap between issuers and investors, the market participants.
Is it a capital issue or is it a awareness issue? When you say that both.
Of course, Islamic finance has a limited capacity, but with the smaller projects, especially in the private sector, SMEs, there are huge opportunities within the solar financing, for instance, gaps. There is a gap. Why not Islamic investment banks or Islamic commercial bank take a role in the structure projects that smaller projects, sukuk below $50 million, $50 million, rather than the big size tickets of $300, $500 million. That's one thing. The other thing is the education, as I said. corporate finance, they don't know about the Sukuk. And also issuers, big project companies like DIWA, like SIWA, you name it, all the renewable energy projects that's taking place in our GCC market, for instance. There's potentials, to tap into the Islamic financing liquidity that we keep saying.
No, that I think makes a lot of sense. Please go ahead, Ahmed. You want to comment on this?
Yeah, thank you, Mustafa, and thank you, Dr. Hatim. In fact, what you just mentioned triggered maybe an idea that we all should think about as an Islamic finance community and as Islamic financial institutions. The discussion that I had with one of my colleagues yesterday to prepare for this session is that now everyone around the world, whether conventional bank or Islamic banks, are shuffling their papers, trying to adjust their business models, their transactions, their policies, in order to be more compliant with the ESG and sustainability concepts. Of course, a lot of models, or maybe a few models of ESG has been already in place, adopted at the international level. But once we apply these models in the context of Islamic banks or Islamic financial institutions, we may see that Islamic financial institutions may get unfair low scores because of any reason or another. So the idea was triggered that why don't we, as an Islamic financial community, to try to see or to develop some sort of a Sharia compliant ESG scoring model. We don't want to, because from all discussions that we have today, we realize that what we do as an Islamic financial community is more or less serving many of the goals and purposes of the SDG and ESG through whether we call it an ethical financing, a responsible financing, a green financing, which is coming from, I believe, Dr. Hatim, from Maqasid al-Sharia, or why the Islamic economy and Islamic finance has been created. What is the ultimate objectives of the Islamic economy and Islamic finance? So maybe this is a food for thought for all of us to come up with a scoring model or a Sharia compliant ESG sustainability model that can fit more into Islamic banks rather than applying a one-size-fits-all ESG scoring model that is applied across the board. Thank you.
That's a very interesting point, Ahmed, and I think that fits in well to my next question, which is, I wanted to drill down in the whole conversation about standards and greenwashing. And Luma, if I could direct that towards you, obviously, there is this push where we want to have international standards and we want to have, consistency across markets, but at the same time, has been mentioned by many panelists that in some cases you need customized solutions to be effective. Would something like independent standards, whether they're Sharia based or whether they're maybe divergent based on different markets, would that be something that would help, or would that just add more greenwashing claims to the industry?
Okay, that's a tough one. But generally speaking, I mean, let's step back and say, what is the purpose of having standards in the first place? Why are we talking always about standards? I think we're always talking about them because today we do not have transparency. One, we do not have comparability. As you mentioned, if I look at two companies in the same sector, in the same jurisdiction, how do I know that this is better than this? But obviously here, this is within ESG umbrella. So because we don't have that, that opens the door for greenwashing claims, right? Because this company is saying a little bit more than that. Is that right? Is that wrong? How do I know? So we do need some level of a starting point, a unified starting point. Now, where it becomes trickier is exactly this, where we have in multiple jurisdictions, we have different types of companies, different circumstances. You cannot compare countries to countries. So you have ISSB that is trying to put a standard for the globe, basically. or a minimum meeting point for the whole globe. Let's see how that's going to be adopted. It's still very, very early stages. To what extent countries will simply say, yes, we'll take ISSB as is or not. We're waiting to see. But that is one. And then whether how we adopt it to our own circumstances is where regulators come in with taxonomies, right? With what is it for me as a country? What means for me to be green, to be social, what is it for me? The EU has already done that, again, with a lot of local controversies, if you like, whether they should include gas or not, but that's their green. And every country needs to try and to do that so that we can have, if you like, this one direction, but also we go back to transparency, comparability, because now we have some type of standard. So standards, I think, are definitely required. In what form? I think the market is still trying to say what is right, what is wrong. But one thing I think that is important to say about greenwashing, no matter what standards you have, they are, as we say, like here are the kind of things that you need to talk about. But we have to go back to 2 key points. The strategy. I cannot emphasize enough how important a strategy, a proper strategy for the company is. So yes, the standards are there to reflect which parts of the strategy I need to talk about. But me as a company, I must have a vision for how I'm going to transition, for how I'm going to face all the risks that are waiting for me on this path to sustainability. And if you don't have that proper strategy, that's sometimes when you fall into the trap of greenwashing, because people cannot see how this comes from this. How is it that you're talking about this or that? That's one. The other thing, and I think this COP28 point and the UAE and the oil and all of that, yes, of course, we hear all of these arguments, but I think in all of these cases, we are missing a real thing, practicality. We saw what happened as a result of a small war, if you like, not, what happened to oil prices and the oil stability. Can the UAE really say, I am going to close the taps? Impossible. So, but the UAE, and taking it as an example, has committed to 2050, and we're already seeing on a daily basis what is happening towards that, and the renewables, the investments that are happening, etc. What we don't want to end up happening, I guess, is what's happening in the UK, for example. The UK are now backtracking, if you like, on what they have committed to towards climate, simply because they're facing reality. They're facing that right now, as a result of political circumstances, COVID, etc. They are facing financial shortages that mean for them as the UK, they cannot satisfy those climate goals, really, unless they cut from somewhere. What is it going to be? Health? Where is this cut going to come from? So there's also this level of practicality that needs to come in, but that is going to take time for people to accept, because right now there's only one narrative, which is close the oil tap. And that, I think, is quite difficult.
No, thank you, Luma. I think you hit the nail on the head where you talked about transparency. And I think transparency is the key. When we talk about, standards or anything else, transparency has to be the end outcome, the objective that we're all working towards there. And, it's very interesting that you mentioned strategy and practicality, because, I want to come to Lillian with a quick question on that. And we know that KFH obviously has, a very broad strategy, regarding ESG across the group there. But can you give us, Lillian, some practical examples of products, whether it's on the retail side and the corporate side, that, embed that strategy and then are able to achieve, the ESG objectives that are there? And as you mentioned, the Sukuk follows the financing book, but the financing book really is the meat of the Islamic finance industry, right? So that's where the change will be derived from. I just want to mention again very quickly to the panelists that we have about 10 minutes left, and I do have a couple of questions. So, if we can keep the responses brief so that we can cover as many of the topics as we had planned. Please go ahead, Lillian.
Yeah, I'll go just a couple of minutes on this and just give you, as you said, like many other large Islamic banks, we do have a framework in place for the last 3-4 years. We have been working on I mean, typically, and it's when I looked at others, it's very similar to what KFH is doing with all banks, and it's also the same for commercial banks. Will have like 3 pillars on their framework. Number one is on the finance itself. What do you finance, and how do you incentivize your corporate teams and your retail teams to go more green, if you like, and which kind of product you could do. Typically, I mean, some just few example. We will give, for example, a preferential rate, financing rate for electrical vehicles, for example, that we have been doing this campaign in Bahrain for many years now. You will be financing again at a better rate some solar energy plant or some solar energy initiative on some school, for example, covering with solar panels their roof or this kind of thing. So we're trying really to show and to push and incentivize our customer to go for some green solution. With also a bit of a selfish, if I may say, a target, which is to increase in our book our green portion of our book, so that we could potentially issue sukuk or get finance sometime at a preferential rate, which is not always the case, to be honest. But we want all to believe that going to the green sukuk space could bring a little bit of a few basis points of saving for the bank in terms of cost of funding, because typically you will see if you take the sustainable sukuk, and I'm not 100% sure it is linked to the fact that they were sustainable, but the fact is that they were more in demand, like 4 times rather than 3 times. But could be also, I mean, could be some other factors, including who is the issuer and how often the issuer is coming to the market. But the fact is that they were more in demand. So typically the price guidance might shrink a bit more, and you might save a little bit. So that's the number one pillar, is try to really have the underlying finance book being greener. The second one is try to educate our retail customers and try to encourage them to be more green, to be more sustainable. So that will go to kind of a paperless statement and the use of electronic cards or electronic transaction rather than being paper-based or with physical cards or not. So all these kind of things are small. It's a bit like the hummingbirds when it's trying to stop the fire in the forest, but at least it gives some kind, infuse in the society some kind of responsibility towards what we are doing on a daily basis. And the third pillar is to look at our own carbon footprint and try to reduce it by having some initiatives at all levels in the bank in terms of what we consume, what we do, and the way we are using our electricity, our sustainability in terms of our premises, and that's really the 3 pillars: the financing book, educating the retail customers mainly, but also could be corporate customer, and then look at our own carbon footprint.
No, that sounds really interesting, Lilian, and I'm glad you closed on carbon footprint, because that brings me to the last topic of the discussion today, which is around the evolution of the concept of carbon credit markets and how institutions can offset their carbon footprint through the use of these markets and help divert capital towards these sustainability initiatives. So I don't know, David, if I can call upon you, when you look at the development of carbon credit markets, how do you view that? And then maybe I'll come to Ahmed after that, who I know has some experience in that area as well.
Yes, I would defer to Ahmed in anything I now say. There are a couple of issues which are relevant. First of all, DDCAP has been involved in a deal which got a little bit of publicity a year or so ago, which was Apicor lending a financing product to Hartree, a UK corporate. And that was a rather deal where the financing was secured by carbon credits. And I think it's probably, I think it took a long time to get done. And I think that's also a sign of the challenges perhaps that relate to the carbon credit market, is the volatility in terms of, the publicly exchanged prices, etc. So again, great to see that innovation, but there are some challenges there. The other aspect we I'd touch on, and I'd only touch on it, is obviously we are always asked, we often asked as to, our own inventory and what assets we can use and whether carbon credits is an asset class we could look at. And at the moment, it's a very clear not possible, again, because of the challenges that relate to the sector in particular, and, the wider strategic initiatives to that. But I think I touched on those 2 points. I think obviously, in terms of what it does, I mean, the carbon credits, some people obviously say it just displaces efforts, but others say obviously it's a necessary staging post to a greater transformation. But I think, probably defer to Ahmed on further comments.
Sure, go ahead, Ahmed.
Thank you, and thank you, David. You put me in a difficult maybe situation. However, yeah, let me share the experience of ITFC when it comes to carbon credit, because for so many years we have been thinking on how to make our trade financing green, or how to make the trade among member countries more greener. And we came to know in the last 2 years about the initiatives that PIF came up with to establish or to create a regional voluntary carbon market, RVCM. So we initiated the discussion with PIF last year, and after a series of meetings and very fruitful, challenging discussions, we signed an MOU, Memorandum of Understanding with PIF. Under that MOU, we promised to get a Sharia resolution to make the carbon credit, the generation, the sale and trading of the carbon credit Sharia compliant, and to work jointly to participate in auctions that are arranged by PIF. And eventually, we will be working together to advise our member countries on the generation as well as sale of their carbon credit, or the carbon credit that they come up with. So as ITFC, alhamdulillah, we obtained the Sharia resolution, where now we are allowed to trade and finance carbon credits both ways. And this, of course, will may facilitate the having a carbon credit as an underlying assets for a green sukuk, eventually down the road. ITFC already participated in 2 auctions arranged by PIF, one in Riyadh last year, and recently, a couple of months ago, in Nairobi in Kenya. In these two auctions, you can see now the appetite and demand, or the movement among a lot of financial institutions as well as corporate in our member countries to come up to trade or to buy or to sell their carbon credit. For example, in Riyadh, 1.4 million tons of carbon credit has been sold at that time, where 15 Saudi and international banks participated in the auction. The second one in Nairobi, the recent one, sold 2.2 million tons of carbon credit, where 16 Saudi as well as international companies participated in the auction. So you can see the growing appetite, the growing momentum towards buying and selling more carbon credit. In fact, three quarters of these carbon credits that have been traded or sold in these 2 auctions originated from countries in Middle East, North Africa, and Sub-Saharan Africa. If you put them on the map, basically the member countries of the Islamic Development Bank or the member countries of ITFC. So we were happy to see that now we are going through or putting efforts and investing in the trading of the carbon credits will be enabling ITFC to achieve its dream or its goal to make the trade more greener, or serving eventually, because we all know that the carbon credits sale or trading hits so many check boxes of the SDGs in terms of clean and affordable energy, climate action, etc., etc. So many areas in the SDGs and ESGs are already being served directly or indirectly by the carbon credit. Now we are in fact in one of the working together in a project to help one member country now to generate blue carbon credits. This is a joint efforts being done now by us and PIF. And internally and inside ITFC, we are coming up with an initiative to design a product to offer financing of carbon credits for member countries. So we are working in so many fronts, whether inside ITFC or with the PIF, in order to make this carbon credit a new way or one of our ways to achieve SDGs and ESGs eventually.
That sounds fantastic, Ahmed. I think the fatwa that you obtained is probably end up being one of the most impactful in recent years in the Islamic finance space. Lillian talked about, being able to fill, his financing book with, the need for green assets, ESG assets, which again, carbon credits can provide on that front, which can then be flipped into sukuks, as you mentioned. If we tokenize it, then David can utilize it on his front as well as an underlying base to service many Islamic financial institutions. So it could have a significant impact. I know that we're about to run out of time. So Dr. Hatem, I will leave the last word to you. And, it's a very interesting topic of carbon credits. Where do you see carbon credit markets converging or interacting with Islamic finance markets, and how significant is that going to be going forward?
Well, thank you, Mustafa. Yes, it's interesting to see this carbon credit, and hopefully carbon credit sukuk is structured. And as Mr. Ahmed was just saying, that the IDB has led efforts with obtaining the Sharia fatwa in this sense, and also is driving this niche market. Malaysia, as well as Jordan, and they have also set up some regulatory support initiatives for carbon credit market as well. So the challenge is that is, as David was saying earlier, that is still it's a not regulated market. There's a lot of issues and need that to be completed so that we have the full regulation and ecosystem to support again issuers of this carbon credit. And sukuk would probably be an important part of this obviously this market. I think I've got a few points here maybe to just share with you as concluding remarks, which include the carbon credit market. And these are basically lined up into 4 areas: governance and Sharia governance, regulation and policy support from countries and institutions, as well as the technology. I think the technology will play an important role here. Innovations and the likes of digitalization and artificial intelligence will probably reduce cost and create efficiency for any market to be developed, especially for the carbon credit sukuk. And processes and people, more of skill development, kind of talent development in this particular specialized area. And one other final point is we always like to see the OIC is our marketplace. The 57 countries is a huge market with nearly 2 trillion GDP, is an opportunity for developing these smaller markets, whether it's carbon credit or whether it is sustainable financing. And I think IDB can take a leading role here to harmonize efforts and business collaborations, with these member countries, I think, Mustafa, to ensure that this is our play field, this is our market, and this is where we can test our products and services and standards. This is a business incubator for us, and we need to take leverage and capitalize on this huge market and see more of collaboration, probably a smaller sub-regions, GCC, ASEANs, Africa, North Sahara, and so on. And then I like to see the IIFM leading again the work, as always, with collaborating with the social bond, green bond principles. I think Mr. Ijlal has done a lot of work and communication with ICMA. And I'm sure we can all work together to support this. Thank you.
Thank you very much, Dr. Hatem. And with that, I think you close it off very well, the key points of the session, and we bring our session to a close. We've run a little bit over time, but it was a very, very interesting, very informative discussion. And I want to really thank all my panelists for taking the time and sharing their expertise and insights on this very, very interesting topic. And with that, I'll hand it back to my dear brother, Dr. Ahmed, for the rest of the webinar. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum salam wa rahmatullahi wa barakatuh. Thank you very much, Brother Mustafa, for this fruitful and really beneficial, discussions on this subject. It is important, and the question raised, what role the Islamic banks, Islamic financial institutions can play, to me is a legitimate question and a tough one to be answered. But if you allow me just to emphasize three things for our global participants today on this subject. First, I would like to emphasize, number one, that from the Sharia or Islamic point of view, preserving and protecting an environment is considered, in Islam as a religious duty. I think in the beginning, my brother Lilian mentioned some scholars are saying this and that, but it's a religious duty from the Islamic point of view, as per the many sayings of Prophet Muhammad ﷺ and many verses from the Noble Quran. So it's not something. So I believe, if this subject is presented to the scholars properly and in a transparent manner, they should not have any problem, inshallah, of approving this, as it happens in IDB, as our brother explained to us. The second thing that I like to emphasize for our global participant is also that green sukuk or sustainable sukuk are Sharia compliant investments. They are Sharia compliant investments, my brother, with regard to climate change and environment preservation, be it renewable energy or the environment assets. All these are Sharia compliant. Of course, scholars should not have a problem with this. Third, I will agree with the view that say that every individual in society has a role to play in this matter. Because our Prophet Muhammad ﷺ said in a hadith, we all maybe memorize it, كُلُّكُمْ رَاعٍ وَكُلُّكُمْ مَسْئُولٌ عَنْ رَعِيَّتِهِ. All of you are shepherds, and everyone of you is responsible for his head. So in this context, everyone is entrusted with the protection and the care of those who under him or under her, and will be held accountable for them, isn't it? So I believe this includes preserving and protecting our environment and the land. Just educative awareness program is needed in this regard, not to be left to the governments only, as the sister mentioned. On this note, this is my comments. Thank you very much for this beneficial session, and hope to see you, inshallah, next year again. Jazakumullahu khairan. So now I will hand over to Mr. Ijlal for the closing remarks. So over to you, Mr. Ijlal.
Assalamu alaikum once again. I will not take that long. We're really thankful to all the speakers, all the panelists, especially this, speakers on this panel, all of you. I know it's quite late also in Malaysia, and there are some maybe groups also who are collectively, listening to the deliberation today. And I think we have really, since the beginning, starting from Brother Nick, his digital exchange, and then Dr. Sami Al-Suwailem mentioned certain things in terms of how role of artificial intelligence, how can we develop, and how can sort of, risk assessment can be done, what he has mentioned. And then later session talked about, of course, I, mentioned about how the Sukuk market have evolved in 2022 and all, into the structure, and the other session, and, and we also had IsDBi, the role they are playing in Sukuk issuances. And then, Indonesia, they have also playing a key role, and they talked about the cash swap Sukuk, which is interesting. They also have Sukuk, smaller, as I mentioned, crowdfunding platform, which they are issuing. So that's something can be done. And this session also, there are various, issues being discussed and raised. I'm really thankful. And the last point, there are two areas which, inshallah, all, what we need to do is it's really collective efforts. We all have to work together, and that's the key, and that's what I have seen. Even when we develop standards, it's not really sort of thing we are after standard, but it's a collective efforts which improve, the industry, not only transparency, which is very important, but also overall, then you develop the industry. You take it to the next level. It's not really, standard in some ways. Previously used to think that they are really not, stop innovation. That's not the case. It helps, the industry grow in the right direction. And in fact, it's not really we are talking about speculative growth, but the real, growth in the real economy, which we are after. And that's, I think, one thing is important. And then, there are two areas which really, personally also I'm really trying to see how best we can play a role is the carbon credit area, which ITFC is playing a great role. What else can we do to further create awareness, like Ahmed mentioned, how we can sort of see these things, these are new things. And the other one, which has been, long-standing, is Dr. Hatim mentioned about the social bonds and green, shall we say, Sukuk principles. I think that's, area which really, we need to have a collective thought on that. And if we get enough recommendations and enough support, we can certainly look into that. I know we have been looking into that for some time now. And I hope so, that my board also will look into these things and try to, inshallah, will come out. With that note, I would like to now close this webinar. I hope we received, alhamdulillah, good response, good attendance for this seminar, good response so far, on the Sukuk report. Some may have downloaded. It's available on our website, and also all your presentations and our discussion also recording would be available in next few days. The report is available, and inshallah look forward to having you all again next year, inshallah, and we look forward to your continued support, for our efforts, inshallah, collectively to and best wishes to all. Thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuh.